Hello everyone, my name is Ketan. I was All India rank 860 in UPSC Civil Services Examination 2015. Currently, I'm the faculty of Indian Economy at UPSCprep.com. I'm also the author of Indian Economy Handbook, which I highly recommend if you're an absolute beginner or is struggling to understand the subject. Now, coming to the point of the video, economic survey is one of the most important documents for UPSC aspirants. Now, UPSC loves to directly pick questions from the document in both your prelims and your mains examination. Now, for prelims, the important data, trends, schemes mentioned in the document will be of more importance. Whereas for the mains, the analysis of various challenges and recommendations will be of more importance. However, for holistic understanding of Indian economy, I will cover everything in detail in this video. It is going to be a slightly longer video, but you can always pause, bookmark the video, watch it in multiple settings. Let's start with the Economic Survey 2024-25. Now, if you look at the Economic Survey and the budget, you'll notice that the year mentioned in the Economic Survey is 2024-25, whereas the year mentioned in the budget is 2025-26. Now, this is because the Economic Survey is a backward-looking document. It looks at the performance of Indian economy in the past year, whereas the budget, on the other hand, is a forward-looking document. It entails the plans of the government in the coming financial year. Now, when is the economic survey tabled? It is tabled by the finance minister. Our finance minister, Nirmala Sitharaman, tabled the economic survey on 31st of January 2025. This is one day before the tabling of the annual budget, right? So the budget is tabled on 1st of February. And a day before that, on 31st of Jan, the economic survey is tabled in the Lok Sabha. Now, what is economic survey? Now, economic survey is an annual document. It is a document that comes every year, presented by the government ahead of the union budget, a day before the union budget, to review the state of the economy. And this is very important, how the Indian economy has performed in the past financial year. The analysis of that, the review of that is given in the economic survey, right? So it is kind of a report card of the performance of Indian economy in the past financial year. It provides statistical and analytical view of the economy. Okay. Now, primary purpose of tabling the economic survey is so that the policymakers, the businesses, the public can know about the economic conditions of the country and the challenges which lie ahead. The economic survey also gives various recommendations regarding improvement of the Indian economy. But these recommendations are not binding on the government. The government may decide to accept or reject these recommendations as it sees fit, right? So the economic survey provides an overview of the short to medium term prospects of the economy. Now, who prepares the economic survey? The economic survey is prepared by the economic division of the Department of Economic Affairs. So within the Ministry of Finance, there is Department of Economic Affairs. And within the Department of Economic Affairs, there is the economic division where this economic survey is prepared. Whereas the budget is prepared also in the Ministry of Finance. Within the Ministry of Finance, there is Department of Economic Affairs, but the division is different. The budget is prepared in the budget division. Now, this economic survey is prepared under the supervision of Chief Economic Advisor, and the current Chief Economic Advisor is Mr. V. Anant Nageshwaran. Now, some trivia about the economic survey. The first economic survey came into existence in 1950-51. And at that time, it used to be part of the budget documents, right? So it was presented in the parliament along with the other budget documents. In 1960s, for the first time, the economic survey was separated from the union budget, and the government started tabling it a day before the presentation of the budget. And since then, the economic survey is being tabled a day before the budget. Now, if we look at this year's economic survey, there are a total of 13 chapters in the economic survey, and we'll look at each of these chapters in detail. All right, let's start with the first chapter, which is titled State of the Economy. Now, this chapter gives an overview of how the Indian economy has been performing. Now, to understand how the Indian economy has been performing, we must first know how the global economy has been performing. Now, if we look at the global economic scenario, then the global economy grew by around 3.3% in 2023. Now, the IMF projects growth rate of 3.2% for 2024 and 3.3% for 2025. So there has been a steady growth for the global economy, right? In this graph, we can look at a steady growth for the global economy. Now, if we look at the advanced economies and the emerging markets and developing economies, then the advanced economies have shown a stable growth, whereas the EMDs have displayed a mixed trend. So some of the developing economies are growing at a faster rate, for example, India. And then there are other economies which are not doing so well. Okay. So there is diverging trends, different trends across regions. If we look at USA, has maintained a strong growth, projected at growing at 2.8% in 2024, which is quite good given the size of the US economy. But this growth is expected to moderate in 2025. On the other hand, if we look at Europe, then the economic recovery has been slow, right? Now, also within Europe, the manufacturing intensive economies like Germany, Austria, they have been struggling, whereas the service driven economies like Spain and France, they have been performing better. Okay. So there are different trends across economy. Now, if we look at sectoral performance in the global economy, then the global service sector has remained strong. So the service sector is doing good, whereas the manufacturing sector has shown contraction, right? So this is the graph of Global Manufacturing Performing Managers Index, PMI, and Global Services, PMI. Now we know that if the PMI value is above 50, which means that the sector is expanding. And if it is below 50, the sector is in contraction, right? So we can see the global manufacturing PMI, which is the blue line, is below 50, performing below 50, which means it is in contraction, whereas the services sector is fairly above 50, which means that the services sector is doing quite well. Okay. Now, if we look at the inflation in the global economy, then the inflation broader trend is that the inflation is going down. Okay. Both for advanced economies and the developing economies, right? So we can see the advanced economies, the inflation is going down. And also the broader trend with respect to emerging market economies or developing economies is overall declining inflation. Okay. Now, why these economies overall are experiencing declining inflation? It is because of the tighter monetary policies that was adopted by the central banks of major economies. So, what happened that right after COVID-19 pandemic and after and especially after the Russia-Ukraine war, there was very high global inflation. Now, to tackle this high global inflation, the central banks of major economies like the US Central Bank and the European Central Bank, they increase the interest rates, right? So that is the monetary tightening policies that they adopted, right? We can see here they increase the interest rates. Now, whenever the interest rate is increased, the businesses or private sector find it expensive to borrow money from the banks. Now, this leads to reduction in money supply in the economy. When there is reduction of money supply in the economy, obviously the demand will reduce and the inflation will also come down, right? So the inflation overall all has reduced both for the advanced economies also and also for the emerging market economies. Okay. Now, another major factor which is influencing the global economy are the geopolitical risks. Now, what kind of geopolitical risks? There is the Russia-Ukraine war that is ongoing. Then there are tensions in the Middle East. Specifically, there is the Hamas and Israel war ongoing. There are other countries which are also experiencing tension. So this is affecting the oil market because the Middle East is a major oil producing area. Then there are cybersecurity threats. So if you have been following the news, you must have read news about the Chinese hackers trying to hack the US telecom companies, right? So there are cybersecurity threats to global infrastructure. No, that is an added geopolitical risk. Then there is supply chain pressures, especially with disruptions in the Suez Canal. So again, if you have been following the news, the Houthi rebels have been attacking the shipping containers in the Red Sea. Now, that has led to the shipping containers rerouting their route from the Cape of Good Hope, right? Now, this leads to increase in shipping time. This leads to higher freight cost. And again, these are the things that will affect the global economy. Okay, so now we have a fair idea of where the global economy is, how is it performing, what are the risks involved. Now let's look at the domestic economy, the Indian economy. Now this year, our GDP growth was 6.4%, right? So 6.4% is fairly high, but last year it was 8.2%. So slightly lower than 8.2%. We have grown at 6.4% in financial year 25. Now, if we look at sector wise, then agriculture sector has grown by 3.8%, services by 7.2%. So these are the better performing sectors of our economy. The agriculture sector, even at 3.8%, has performed very well. Services sector is obviously our fastest growing sector. So it has grown at 7.2%. The area where we are slightly struggling is the industrial sector, which has grown at 6.2%, but the expectation was higher. Okay. So the industrial sector remains moderate. So as you can see here, the yellow bar is the average growth over last 10 years, and the green bar is at what rate the sector has grown in financial year 25. So overall, the services sector has done well. Even if we see at that growth rate of gross value added and the GDP, here also we are doing fairly well. So despite the global uncertainty, the global geopolitical risks and all those uncertainty there, the India's growth remains close to decadal average. So we are almost close to the decadal average. Now, if we look at the individual sectors, if we talk about agriculture, then last year we had a record Kharif production. So in the Kharif season, the production was of record levels. Why so? Because there was a strong monsoon. Now our agriculture is monsoon dependent. So last year the monsoon was very good. So there was a strong monsoon. The reservoir levels were high. So there was more irrigation facilities available. The sowing also increased, and because of these reasons, the agriculture sector performed very well. If we talk about the construction sector, now the construction sector has expanded significantly. Now we know that the government of India has a big focus on capital expenditure. It has increased its capital expenditure. Now these capital expenditure are productive expenditures that goes into building infrastructure like roads, railways, airports, schools, hospitals, all those sort of things, right? So because of the public infrastructure investment, the construction sector has benefited. If we talk about the manufacturing sector, then this is the area of concern for the Indian economy. The manufacturing sector has faced global demand slowdowns. So the demand for our manufacturing goods in the global economy has slowed down because the global economy has not been doing as well, specifically the European market, which is a big market for our manufacturing goods. Okay. So manufacturing sector is suffering a little, but still, if we look at the PMI indicators for manufacturing in India, then it continues to be in the expansion zone, which means the number is above 50. Okay. Next is service sector, which is the fastest highest performing sector of our economy. So it remains robust, and particularly in finance, real estate, uh, IT, professional services. Here we are doing quite well. Okay. Yeah, if we look at investment and consumption, okay, now we know that our GDP equals consumption plus investment plus government spending plus export minus imports. Okay, you all know this formula. Now the consumption accounts for maximum portion of our GDP, right? So we can see here the private consumption remains strong and accounts for 61.8% of GDP. In fact, this number 61.8% is highest since 2003. Okay, so there is strong demand for consumption in our economy. Now, this is Mm, the increase was majorly driven by increase in rural demand. Now, why the rural demand increased? Because there was a good Kharif season, so a lot of money in the hands of the rural population, so their demand increased, right? So supported by strong agricultural income. If we look at the investment growth, then there was slight softening in investment growth witnessed in last financial year, and the major reason for that was the election. Okay. So whenever there is a general election in the country, there is the model code of conduct. Now, whenever the model code of conduct is in play, the government cannot spend big amounts. Okay. And also, because there is uncertainty regarding the results of the election, so even the private sector is a little cautious. Okay. So there were delays in public capital expenditure plus the caution of private sector. So the investment growth was little softened, but still it was around 31%. Okay. So if we look at this graph, we can see that consumption accounts for 61%. Then consumption, which is measured as PFC, private final consumption expenditure. Investment, which is GFCF, is around 31%. Okay. The government spending is around 10%. Exports and imports are also major parts of our GDP, but because they cancel each other out, so the net effect of external trade is minimal on our GDP, but still the export is at 22% of GDP and import is at 24% of GDP. Now, if we look at employment status in our economy, then the unemployment rate has declined while formal employment has increased. So even with employment, the economy seems to be doing pretty well. Okay. If we look at the EPFO payroll data, the Provident Fund payroll data, it shows that there is a rise in new employment. So more and more youth, particularly the youth, are getting employed in the formal sector. Okay. Also, the India's labor force participation has improved and particularly driven by sectors which is very showing high growth, which is services and construction. Right. So if we look at this graph again, we see that the labor force participation rate, which is the blue bar, it has been increasing. The worker population ratio is also increasing. And the unemployment rate, which is the black line, has been decreasing and is at currently at 3.2% of our population. Next, let's talk about the fiscal health of the economy. Now, we know that during the pandemic, there was a need for an increase in government expenditure, right? And because of that, there was major borrowing by the government, which led to increase in fiscal deficit. Now, fiscal deficit is the net borrowing needs of the government. Fiscal deficit काफी बढ़ गया था, but after the pandemic, the government has followed a path of fiscal consolidation. So the government has been working towards decreasing the fiscal deficit, right? वापस से इसको कम करना है. So we see that the fiscal deficit has remained under control with increased capital spending. The capital expenditure has increased. So the total expenditure of the government is divided into capital expenditure and revenue expenditure. The capital expenditure is the most productive part of the expenditure, which has been increasing. If we look at the state finances, even the state finance has improved because the government is sending a larger portion of our tax collection to states, which is again being spent on public infrastructure. Okay, so even the state finances as well. If we talk about revenue collection, how much money, how much revenue receipt the government is collecting, so even that is strong, which is majorly driven by our tax collection. And within the tax collection, also the GST collection has increased and the corporate tax receipts has also increased. So here we are doing quite well. Okay. In this graph, we can see there is a strong focus on fiscal discipline with increased proportion of our capital expenditure, right? So the y-axis is the capital expenditure as a percentage total of total expenditure, right? So out of total expenditure, the capital expenditure has been increasing, and the capital expenditure is the productive expenditure of the government. The money government is spending on infrastructure like road, railways, uh, airports, ports, yeah, hospitals, schools, all that, right? So that has been increasing. So again, in this area also, the Indian economy has been performing quite well. If we talk about inflation in the country, then the retail inflation, which is consumer price index, has declined to 4.9% in financial year 25. So we know that the target of RBI for consumer price index is 4% with a tolerance band of plus minus 2%, right? So we can see that we are within this limit. Okay. Now, within the retail inflation, we see that the core inflation has trended downward, but the food inflation remains volatile. Okay. So this is still remains a major concern area for the Indian economy, the food inflation. Okay. If we look at this graph, the core inflation is going down, but the food inflation, which is CFPI, has remained very volatile. Okay. Now, in the subsequent chapters, of course, we are going to see this in much more detail, what exactly is happening. Okay. If we talk about banking, we talk about the banking sector, then the banking sector has remained stable. In fact, the non-performing assets of the banks is at a 12-year low at 2.6%, which means that the people who are taking loans are actually paying back the loans to the banks. So the profitability of the banks has increased. Okay. We can see here the non-performing assets is decreasing and is at currently 2.6%. The CRAR, which is capital to risk weighted assets ratio, right? Also known as the capital adequacy ratio of the bank is um, around 16.7%, which is sufficiently high because the requirement which is imposed by the RBI on the commercial banks is for at least for the public sector banks, it is around 12%. It is 12%, right? So it is fairly above 12%, which means that the financial health of the banks is quite well. If we look at the external sector, then our forex reserve, the foreign exchange reserve, stands at 634.6 billion as of January 2025. Okay. Now this is a good amount because it represents around 90% of our external debt, right? Or you can say around 10 months of import cover, 10 to 11 months of import cover. So it is generally believed that if the country's foreign exchange reserve is enough for 6 months of imports, then that is a good number. So we currently have in an import cover of 10 months, which means that the foreign exchange reserves is also good. Okay. If we talk about the trade performance, then we know that our merchandise exports is suffering because of the global demand that has slowed down. So there is a slight concern area. We have grown, but at a much slower rate, around 1.6%. The service sector exports is doing quite well. Then another important factor is the total remittance that the country receives. Now, India has a global expatriate population, highest global expatriate population. In fact, Indians are spread across all over the world, working in all the countries in the world, and they are sending back money, which is known as remittance, right? So India remains the world's top recipient of remittance. Okay. And this money is important because it offsets whatever deficit we have in merchandise trade. Okay. So in merchandise, we are a net importing economy, but that is offset by our surplus in service trade and then these remittances. Okay. So if we look at this graph again, the blue bar is merchandise trade balance, which is negative. So we import more merchandise, we import more goods and export less. So this is negative, but it is offset by our service sector trade balance, which is net positive. And then the net private transfers is again positive. This includes remittances. Okay. So overall, the current account balance is slightly negative, but still it is balanced. Okay. So it not that negative also, that it is a major area of concern. And also we have a capital account surplus. So the capital account surplus compensates for the current account deficit. Okay. If we talk about the foreign direct investment, the FDI, then FDI inflows has moderated because of uncertainties in the global economy. थोड़ा सा moderation हुआ है. But a major reason for a decline in the net FDI inflows is the increase in repatriation, right? What is repatriation? The foreign investors have invested money in the Indian economy. Now, when their investments will make profit, they will take out that profit, yeah, back into their own country. So that is known as repatriation. So if the investors are making profit, so that is a good sign. That is a sign for a growing, well-performing economy. So repatriation has increased. So for now, the net FDI inflows has decreased, but अभी उतना भी concern नहीं है. All right. Now, if we talk about the portfolio investment, which is FPI, right? Now, FPI is also known as hot money. Why is it known as hot money? Because it can be taken out of the economy very uh, fast, and therefore it has remained volatile because of volatility in the global economy. All right. All right. So, in the end, the economic survey talks about the outlook and the future prospects. So, the economic survey says that for financial year 26, the growth rate is projected to be between 6.3% to 6.8%, contingent on that we do following things. The private sector investment revives, there is stable consumer confidence, and there is sustained rural and urban demand. If we ensure these things, then the economy will grow at 6.3% to 6.8%. Now, there are challenges that are there. There are geopolitical risks that are still very elevated. There are several wars going around the world. There are other issues, right? There is trade war going on between China and USA, and because of these reasons, there is risk which can affect trade and inflation. And then there is need for regulatory reforms to boost competitiveness, majorly in our manufacturing sector. Okay. So lastly, the economic survey says that the policy focus should be on structural reforms, easing regulations so the manufacturing sector becomes more competitive and increasing manufacturing competitiveness. Policy of the RBI and the performance of the financial sector. Now, if we talk about the monetary policy decisions that were taken in the financial year 25, and then we see that the repo rate has been maintained at 6.5%. Now, you should know that due to COVID, the RBI had reduced the repo rate to increase the borrowings in the economy. Now, after the COVID period, the RBI started increasing the repo rate to tackle inflation, right? So it increased the repo rate to 6.5%. Now the RBI has maintained this 6.5% repo rate. And now we saw that the inflation is now under control at 4.9%, but still the RBI has remained cautious and maintained repo rate at 6.5%. Though if the inflation remains under control for longer, then the RBI may look to reduce this repo rate in future date. Okay. So the repo rate has been maintained at 6.5%, reflecting a cautious approach to inflation control. Okay. Now until August 2024, the stance of the RBI was withdrawal of accommodation. So the accommodation was provided during the COVID period. It was changed to withdrawal of accommodation when the RBI started increasing the repo rate. And that stance remained till August 2024. It was aimed to reduce excess liquidity to control inflation. However, in the Monetary Policy Committee meeting in October 2024, the stance was shifted to neutral, right? So this neutral stance indicates that there is a more balanced approach to inflation and growth taken by the RBI. Okay, although the repo rate remains unchanged, the stance has been shifted to neutral. In the December meeting of the Monetary Policy Committee, a decision was taken to reduce the cash reserve ratio to 4%, which was earlier 4.5%. Now we know that the cash reserve ratio is the total amount of cash that the bank has to keep aside out of its total NDTL, the net demand and time liabilities. Okay. So if we reduce it from 4.5 to 4%, that means that the banks has to keep a smaller sum of amount as cash, which will lead to bank having more money, which it can loan out to people, right? So this will inject money into the economy. So it injected around 1.16 lakh crore of liquidity in the banking system. Okay. So these were the major monetary policy decisions that was taken in financial year 25. Now, if we look at the money supply trends, so we know that the policy rate has been at 6.5%, which is high, which should lead to some moderation in money supply. Okay. So we see that the reserve money, which is M0, it grew at 3.6% year on year compared to 6.3% in the previous year. Okay. So some moderation has happened, right? So that decline suggests slower expansion in the most liquid form of money. So M0, the reserve money, is the most liquid form of money, we know. The broad money, which is M3. The broad money is the total demand deposits in the banks, also the time deposits in the banks, as well as the cash that is there in the economy. Okay. Now it grew by 9.3%, which was down from 11% in the last year. Okay. So some moderation of money supply has taken place. But a very interesting thing to notice is that the money multiplier. Okay. The money multiplier is M3 divided by M0. Okay. Broad money divided by reserve money. It has increased to 5.7. Now it indicates that there is more financial transactions happening in the economy. So it reflects higher liquidity in the banking system due to increased financial inclusion. No more and more people have bank accounts. So they are using their accounts to transact, and this is leading to creation of more money out of the reserve money. So the money multiplier has increased to 5.7. Last year it was 5.5. So more financial inclusion happened. At the same time, more digital transactions are also taking place. Everyone is using the UPI and other digital forms of money to transact. Okay. So if we look at the increase trend of increase of money multiplier over the years, which means that in a broad level, more and more financial inclusion has happened. So the broad trend is that there is increase in the money multiplier. Obviously, during this period, the money multiplier decreased because of the COVID related lockdown. तो थोड़ा सा financial activities कम हो गया था, less money were getting exchanged, but now it has again picked up. Okay, so this is a good sign for the economy. If we look at the banking sector, then we discussed that the bank credit has been growing steadily. So bank has been giving more and more loans, right? And a very important function of the bank is to give loans because that is how banks earns profit. Okay, so that has been increasing. Also, we discussed that the net non-performing assets has been decreasing, which means the profitability of the banks has increased. Okay, so the credit growth is now closely matching the deposit growth. Okay, so the rate at which people are depositing money in the bank, it is almost at a similar rate. The bank is also giving out loans to the people. Okay, so that is a good sign for an economy. So the bank credit has been increasing. Now the non-performing assets, as we discussed, has decreased to 2.6%, which is the lowest in 12 years. Okay, now what are the reasons? Lower loan defaults. So less and less people are defaulting on their loans, which means that the profitability of the businesses are high, they're making money, and therefore they are able to repay their loans to the banks. There is improved loan recovery mechanisms. So a lot of reforms has been brought in by the RBI to improve loan recovery. For example, the IBC, Insolvency and Bankruptcy Code, which has been a game changer in recovery of loans. There has also been write-off of bad loans by the banks. So the banks have been recapitalized, they have enough money in their hand, so they are able to write off the bad loans and thus reducing the amount of non-performing assets they have in their books, right? So NPS has decreased. We also discussed this that there is higher capital to risk weighted assets ratio, CRAR, or capital adequacy ratio, which indicates strong capital buffers, which means the financial health of the banks are good. The number is at 16.7%. The RBI says that for the public sector banks, it should be 12%. For the scheduled commercial banks, it should be at 9%. So we are much higher. The bank have much higher CRAR, which is again a sign of good health of the bank. If we talk about financial inclusion, which means more and more people are now within the formal banking sector, right? They have bank accounts, they are transacting, they have access to credit from the banks, right? So RBI has come up with a financial inclusion index in which we see that the figure was 53.9 in March of 2021, which has increased to 64.2 in March of 2024. So the financial inclusion index has increased, which means more financial inclusion has happened, signifying enhanced accessibility to financial services. Okay, and this is why the money multiplier is also increasing. Okay, now let's look at how the capital market has been performing. Now, if we look at the capital market, the Indian stock market reached record highs in December of 2024, outperforming other emerging markets, right? So India has been able to outperform even other countries. Despite the global uncertainties, so there is global uncertainty, there is geopolitical risk, there's trade war happening, there is so many issues in the global economy, and despite that, the Indian economy has shown resilience and outperformed other markets. Okay, so again, a sign for a good, dynamic, vibrant, growing economy. What are the key reasons for this market growth? Number one has been the increased participation of domestic retail investors. So now a lot of domestic retail investors are now opening demat accounts and investing in the stock market, right? Now this expansion started happening at a much higher rate during the pandemic. Because of the lockdowns, many people started investing in the stock market, and because there has been sustained high growth, sustained profit, so this trend has increased over time, and more retail investors are now investing their money in the stock market. There has been a rise in IPOs, right? Initial public offerings is the mechanisms through which companies go public and raise money from the market for the first time, right? So the IPOs has increased with 259 IPOs from April to December of 2024. Okay. The third reason is the financialization of savings. When the household makes savings, the savings will either go to the bank, right, or go to the stock market. So earlier, the incidence of savings going to the bank in fixed deposits or savings account was higher. Now, people prefer to invest in the stock market because the returns are higher, right? So that is known as financialization of savings, with more households investing in the capital market. So this has led to growth in the capital market. But there is a slight concern regarding the corporate bond market, right? Majority of the investment that is happening in the capital market is happening in the equity market. People are buying stocks and shares. They're not buying as much bonds, right? So the corporate bond market remains underdeveloped, with bond issuance at only 18% of GDP, whereas in some of the other developed countries, for example, in Korea, it is 80% of GDP. Even in China, it is 36% of GDP, whereas in India, it is only around 18% of GDP. So what are the challenges in the corporate bond market? So currently, 97% of corporate bonds are limited to these highly rated bonds, right? AAA, AA plus, AA rating bonds, which is making it difficult for some lower rated companies to raise funds in the corporate bond market. So maybe some reforms is required here. Also, the private placements dominate the corporate bond market. So the bonds are not made available to public. In fact, the companies are preferring to open it for private placements. Private placement means that the high net worth individuals or some institutional investors get to invest in the corporate bonds without the bond being made public for the being made public, so that general people can buy those bonds. Okay, so this reduces liquidity and accessibility for retail investor. तो retail investors को buy करने का मौका ही नहीं मिल रहा है. So these are the challenges regarding the corporate bond market. Another challenge in the capital market is cybersecurity. Now, cybersecurity has become a big deal because there are a lot of scams happening in the stock market, right? You and everyone must have experienced a lot of scam calls and people trying to scam you out of your money or out of your investments. So, cybersecurity is a big issue. Cybersecurity threats has increasing, which has necessitated stronger regulatory framework to protect digital banking and financial transactions. तो ज़्यादा regulatory framework का ज़रूरत है, because if large incidences of frauds start happening, then people will lose faith in the capital market and they will not invest in the um, uh, capital market or the stock market, which is going to be a loss both for the investor also and for the economy also. So therefore, it is required that there should be strong regulatory framework. In this area, this agency, the Financial Stability and Development Council, has a big role to play. Okay, let's look at the outlook and challenges in the financial sector. So the key challenges in the financial sector is there is surge in consumer credit and unsecured loans. A lot of people are taking up unsecured loans. Now, the issue with unsecured loans is that this may lead to increase in the number of non-performing assets because the people will not pay back the loans. Okay. So this is leading to increased financial risks. So that is one challenge. Then there is regulatory concerns over equity and bond market, particularly in IPO, right? जब भी किसी कंपनी का आईपीओ आता है, people, you know, hoard over subscribing it, right? So there is oversubscription of IPOs. There is speculative trading happening rather than doing research and investing in companies with strong fundamentals, companies which are profitable and doing good. People are speculating, right? And speculative trading is may lead to more volatility. Okay. So IPO oversubscription, speculative trading is another challenge. Obviously, we talked about the cybersecurity vulnerabilities, the rise of AI and digital banking, and these are leading to a lot more issues. Okay. So the economic survey gives some policy recommendations. Number one is to strengthen risk management in lending to prevent financial stability. So more risk management should be there. The unsecured loans should not be given to anyone without doing due diligence. There should be expansion of capital market to reduce over reliance on bank credit. So capital market should be expanded so that more and more people have avenues to invest their money. And finally, there should be more financial literacy and more financial inclusion so that people can partake in the capital market. Okay. And for sustained investment growth. Okay. The next chapter is external sector. Now, before we look at India's performance in the external sector, let's look at the global trade. Now, we know that the world is experiencing economic and political uncertainty because of these reasons, right? We discussed the various geopolitical conflicts that is happening around the world, the economic fragmentation. Economic fragmentation means that the countries are now preferring to do business with their friendly countries or countries nearer to their own country, right? This has led to economic fragmentation. Climate related disruptions, for example, the disruption in the Panama Canal, where a drought like situation has happened, right? So climate related disruptions are also happening. Now, the 2024 was a very major year in terms of elections, with more than half of the world's population voting for a new government, right? So election happened in India, elections happened in USA, the elections also happened in many other countries, and with that, many new governments came to power, and that led to uncertainty in the economic policies and trade regulations. So because of all these reasons in the global trade, there is uncertainty. Okay. Now, why is it not good for the economy? Because the economic uncertainty can lead to reduced investment because the investors will become very cautious. They want more certainty, right? There will be higher borrowing cost and lower economic growth. All right. Now, in global trade, we see a lot of disruptions and rise in trading cost. Now, we have discussed since November 2023, the global trade has been significantly impacted by disruptions in the Red Sea. Okay, a lot of shipping containers in the Red Sea has witnessed attacked by the Houthi rebels, right? And this has led to these shipping containers rerouting from the Cape of Good Hope, which is leading to more shipping time, increase in fuels, so increased shipping cost, delays in mainly Asia to Europe trade flows. Okay. Now around 40% of trade between Asia and Europe passes through the Red Sea, right? So any disruption there is a major cause of concern. So this will have direct disruptions, will have direct consequences on supply chains. Now, also the Hormuz Strait, which is between the Persian Gulf and the Gulf of Oman, facilitates 21% of global petroleum trade, right? The Middle East is a major source of petroleum, and this region has also seen instability, and this has further led to higher energy prices worldwide. Then there are climate related changes that has led to disruptions. For example, the droughts in Panama Canal, where the water levels have reduced, limiting the passage of large vessels. So the large vessels are not able to pass through the Panama Canal, and again that has led to increased in the trade cost. Now the Panama Canal has affected approximately 5% of the global maritime trade because that trade passes through the Panama Canal, increasing in shipping time, higher transportation cost. Okay. So these various disruptions are taking place in the global trade, and this is leading to more trade costs. Now there is also a shift that has been noticed in the global trade, which is the phenomena of friend shoring and near shoring, right? Now, what is friend shoring? The countries are increasingly trading with more politically aligned nations, right? For example, you'll see that the Russia and China's dependence on European Union has declined, right? Because they are not politically aligned nations. Whereas the Vietnam's trade with China has grown stronger because Vietnam and China are more politically aligned. So this larger trend is being seen in the global trade. There is greater concentration of trade among key economic alliances, reducing dependency on rival economies because there is uncertainty, there is geopolitical conflicts happening around the world. There is heightened tensions between China and USA, Russia and European countries, Russia and USA. So, and because of these reasons, there is this trend of friend shoring and near shoring. Near shoring means increasing trade with your neighboring countries. For example, trade between USA and Mexico has increased. Okay. So these are the trends we are seeing in global trade. Also, there is rise in non-tariff measures to influence trade. Okay, what is non-tariff measures? Now, earlier tariffs were used, right? Tariffs are your custom duties, uh, tariffs imposed on export and import of goods that were used to regulate trade. But now with World Trade Organizations, these tariffs has reduced, but it has been gradually replaced by regulatory barriers, right? Which are non-tariff measures such as technical standard, environmental requirements. A lot of exports or imports, there is environmental requirement imposed on them. Okay, as we'll see. So there are over 26,000 new trade related restrictions that has been introduced globally between 2020 and 2024. So a lot of non-tariff barriers has been created, which is impacting global trade. Now these technical barriers to trade affect 67% of global trade, making compliance expensive for exporters. Right? Many times it becomes very expensive to for the exporter to comply to these technical barriers to trade. For example, European countries imposes certain sanitary and phytosanitary measures for importing from India. So the Indian exporter will have to comply, and that will increase the cost. All right. So in this scenario, let's look at India's trade performance. Okay. Now our total exports reached 602.6 billion US dollars in the first 9 months of financial year 25, which was a growth of 6.6%. 6% year on year. Okay. Now, this total out of this total exports, The merchandise growth has been subdued, but the services growth has been robust. Okay. So the merchandise exports of goods grew modestly by 1.6%, but services exports surged and grew by 11.6%. So services are our strong suit, right? Our strong area. So services में काफी अच्छा growth देखने को मिला है. Highlighting India's competitive strength in IT and business services. So the major in services exports from India is IT and business services like consultancy services, right? Or IT like softwares. Total imports increased by 6.9%, reflecting strong domestic demand for foreign goods. Okay, so the imports has also increased. So in this chart, as you can see, trends in merchandise trade. So merchandise import, which is the green bar, is more. The exports, the yellow bar is less. So we are a net importing country in terms of merchandise. So here we witness a deficit, okay, of 211 billion US dollars. Whereas in services, the imports is less and the exports is greater, right? So we are a net positive 281 billion US dollars. We are positive in service, net service balance, trade balance. Okay. So the deficit in merchandise trade is compensated by the surplus in services trade. Now, specifically, if we look at sectors, then there are challenges that has been discussed in the economic survey, challenges to India's textile exports. Okay. So the economic survey says that the India's textile exports have struggled to grow despite strong domestic industry. So we have a good, strong domestic industry in textiles, but it has struggled to grow in terms of exports. We are the sixth largest exports globally, but trail behind China, Bangladesh, Vietnam, even China, even Bangladesh and Vietnam are ahead of us in terms of exports. Now, why is that? One of the reason is that our textile export is dominated by cotton based product. Cotton का बहुत सारा textile we export. Whereas the global demand has shifted towards synthetic and man-made fibers. Okay. So demand has shifted from cotton to synthetic and man-made fibers, and these are the areas where we do not have competitive advantage. Yeah. So that is one reason for slowdown in our textile exports. Another is high trade barriers, uh, high tariffs, high trade barriers, right? So our textile exports face tariff. For example, USA imposes a 11.3% tax tariff on Indian exports, whereas competitors like Korea enjoys zero tariff under free trade agreement that Korea has with USA. Okay. Also, Indian exporters are burdened by complex procedures like detailed reporting for raw material, pre-shipment inspection certificates. So these are complex procedures which adds to the cost of Indian exporters. Now, government has come up with various initiatives to support the textile sector. PLI schemes is there, which is providing money to encourage investment in textile sector. Then there is National Technical Textile Mission, which is promoting research in sustainable fabric, advanced textiles. Okay. Then PM Mitra Park initiatives are there to create textile hubs, right? On the basis of hub and spoke model, textile hubs will be created, which will reduce logistical cost. Logistical cost come ho jayega, and at the same time, efficiency will increase. Correct? Because a lot of textile industries in India are MSMEs, micro, small, and medium enterprises, right? So there are issues of economies of scale. So therefore, creation of these textile hubs can help. Okay. Next, let's talk about trade barriers and non-tariff measures, right? Because there is increase in non-tariff measures to influence global trade. Okay. Now, since WTO agreements, tariff has declined because of the WTO. The mandate of WTO is to decrease the barriers to trade in uh, global trade. And उसके लिए the WTO has various measures where the tariffs are reduced. So although the tariffs have reduced, it has been replaced by non-tariff measures. Okay, including technical barriers to trade, subsidies, environmental regulations that are imposed, and that increases the cost of doing trade. Okay, for example, is this climate related non-tariff measures? Uh, for example, the European Union's carbon border adjustment mechanism. What it does is it imposes a carbon price on imports to equalize cost with European Union producers. So it increases the barrier for any exporter from other countries. So suppose a Indian exporter will export to European Union, then an added carbon price will be imposed, and that will make it non-competitive, uncompetitive in the European market. Similarly, there is a deforestation regulation, a European Union deforestation regulation. What it does is it mandates that imports must be deforestation free. Okay. So now again, Indian exporters are there who are exporting Indian coffee, leather, wood-based exports. So they would be severely affected because they cannot ensure that they are deforestation free. Okay. So these companies will be required to prove traceability of their supply chains, which will increase the costs of these products. And again, they will become uncompetitive in the European market. So these non-tariff measures, a larger trend is that these non-tariff measures is sort of replacing the tariff measures that was earlier used to control regulate trade. Now that has been replaced by non-tariff measures. Okay. Next, let's talk about foreign direct investment. Now, we have already seen that the net FDI inflows has declined due to rising repatriation by foreign investors, which means that a foreign investor who has invested in the Indian market has made profits and now is booking his profit, taking profits out of the country into his own country. And because of that reason, the net FDI inflow has declined. But in the economic survey says that despite the short-term FDI fluctuations, India remain an attractive investment destination, right? India is the fastest growing large economy and therefore a very attractive FDI destination for these foreign investors because our macroeconomic fundamentals remain strong. We have a favorable business environment and high economic growth prospects. So foreign investors also want a piece of the cake. They want to become part of the growth story of India and profit from that. Okay, in this chart you can see the trends of gross FDI inflows. So it has moderated of late. It has moderated because of increase in repatriation. Okay, the repatriation has been high, so a lot of profit has been booked from India. Now, repatriation is not anything negative because any economy which is providing good returns for the investors is the sign of a vibrant economy. So, for the foreign direct investors, if they are making profit and they are booking the profit, then that is a good sign because this will increase confidence among the foreign investors and then they will invest more money into the economy. Okay. Next, let's look at the foreign exchange reserves. We have a foreign exchange reserves of 640 billion US dollars in December of 2024. Now this covers 90% of our external debt. Okay. And therefore provides strong financial buffer against external risks. Now, whenever a country has a good forex reserve, it increases the confidence of other countries who become more willing to do business with India. right? Because they know that the country will not default on payments. If there is some import or export will happen, then at least the country has enough foreign exchange reserves that they can pay for all the imports. So a good amount of foreign exchange reserves we have. As you can see here, in fact, we reached a high in September. After that, we have witnessed some decrease in the foreign exchange reserves because the RBI has been spending a lot of dollars to keep the exchange rate stable. So some amount has been spent. So it has decreased a little, but still we have 640 billion dollars. Now, what are the investment strategies for India? What can we do to attract more FDI? The economic survey recommends that more sectors can be opened to foreign investment via automatic route, right? So there should be no paperwork, no bureaucratic procedures. Automatic route say more sectors should be opened to receive FDI. Okay, there should be tax certainty, ease of doing business. Now, to enhance investment efficiencies, the economic survey recommends deregulations, right? So again, the bureaucratic procedures, rules, and regulations should be removed so that there is greater freedom to do business in India, right? It will improve ease of doing business. At the same time, there should be a boost in Make in India scheme to integrate into the global supply chains. So once India integrates into the global supply chain, more FDI will start flowing into India. Okay. Let's look at the conclusion and outlook for the chapter on external sector. So it says that India's external sector remains resilient despite global trade protectionism that is going on. Okay. So the friend shoring or near shoring that is happening in the global trade, despite of that, the Indian economy, India's external sector in particular remains resilient. Now, there are some strategic priorities that we should look for. That is, we should look for reducing trade cost and improving trade facilitation. We should also expand into new export markets, right? The major markets for Indian export is right now is USA and European Union, but we should look for new markets. We should diversify. There should be strengthening of India's role in global supply chains to attract more FDI, right? Become part of the global supply chain and also focus on strengthening domestic manufacturing so that our merchandise become more competitive in the global market. The next chapter is inflation. Now, let's look at the global inflation trends. Now, globally, the inflation peaked at 8.7% in 2022. So this was just after the COVID pandemic. So mainly due to supply chain disruptions that happened just after COVID pandemic and the geopolitical tensions, particularly the Russia-Ukraine war, right? During this period, the inflation peaked at 8.7%. But right now in 2024, the inflation declined to 5.7% as economies adjusted to these shocks. So various measures were taken by different countries to control inflation, particularly the synchronized monetary tightening that happened in the developed countries, particularly USA and the European countries. Okay. So that happened. Supply chains also stabilized a little, and some policy measures, the monetary policy measures took effect, right? So the inflation, global inflation is now currently at 5.7%. Now, let's look at the impact of monetary policy on global inflation that I was talking about. Uh, Now, because inflation control is a priority, a global priority, right? Because अगर inflation बहुत ज़्यादा हो जाएगा countries में, then that can lead to plethora of economic problems, right? Businesses will start suffering, consumption will go down, and then that will have effect on everything, on investment, on employment, right? So inflation control is a priority. Even in India, inflation control is priority and the key mandate of the RBI to control inflation. So similarly, in other countries, the central banks adopted monetary tightening policies. So they increased the policy rates. Okay. Now, because of these, the money supply in all the all the economies was moderated, and thus inflation was brought into control. So interest rate hikes, reduced money supply were main tools used to curb inflation. So this has resulted in that the headline inflation has saw a steady decline in most countries. Okay, during financial year 24 and 25. So the inflation has been going down. So that is the broad trend. Now in inflation, the core inflation, which is inflation excluding the impact of food and energy, right? Food and fuel, उनका impact हटा दे, so that we get core inflation. Now this has dropped globally. Even in India, the core inflation has dropped, suggesting inflation pressures on non-food, non-energy sectors were stabilizing. Okay. Now the decline was primarily driven by falling international commodity prices. The international commodity prices have decreased, and this has led to decrease in core inflation. Okay, which reduced cost for businesses and lowered price pressures on many sectors. So the core inflation has been declining. But what about the global food inflation trends? What is happening in the food inflation? Now we know in India it has been very volatile, but the global food inflation is also witnessing a declining trend. Okay, supported by better agricultural yields, stable supply chains. So the food inflation is also on a declining trend. However, this trend is not uniform. Okay, many of the countries, uh, particularly emerging markets like India, Brazil, China, is experiencing high food inflation because of various reasons like localized supply chain disruptions, unpredictable weather conditions, structural efficiencies in food distribution systems. So even in India, there are structural deficiencies in the food distribution system, which means that there are a lot of middlemen, right? So the food prices are high, the end consumers are paying a high price, but that high price ka benefit is not reaching to the farmers. They are getting usurped by the middlemen, right? So these are structural inefficiencies in food distribution system. So because of all these reasons, some countries are still experiencing high food inflation. Okay, so that's the global trend. Now let's look at the domestic inflation trends in India. What is happening in India? Now, India, we see that the retail inflation eased from 5.4% in financial year 24 to 4.9% in financial year 25. Okay. Now, the reason, number one reason is obviously the monetary policy, where the policy rates are high. We know that the repo rate currently is 6.5%, right? So this decline was result of targeted government interventions and monetary policy actions. In fact, the core inflation has dropped to a lowest level in a decade. 10 साल में अभी सबसे कम है the core inflation, which suggests the underlying inflationary pressure in the economy is weakening. The underlying pressures, the inflationary pressures is weakened, but still, because the food inflation is very volatile, food inflation is quite high. So overall, the inflation is slightly above the ideal 4% that we want, right? 4% is the target with a tolerance band of plus minus 2%. Okay. So there is moderation in headline and core inflation. The CPI inflation is down. Now, why is this? Because of various factors. Various factors has led to this decrease in retail inflation. One is core service inflation has decreased, okay, which fell faster than the core goods inflation. So it's the high decrease in core service inflation. Also, the wholesale price index, okay, the wholesale price index, the WPI inflation has been in negative zone, okay, which indicates that the input cost of the producers, right, the producers, they are buying raw materials, the input cost has been decreasing, which in turn is decreasing the retail price. Obviously, once the input cost will decrease, then the cost of producing goods and services will decrease, and then final price will also decrease. Another reason is the fuel price reduction, right? Because the global fuel price is reducing, there is lower fuel price, which leads to reduced transportation and logistical costs. So that overall has the impact on all the goods and services in India. Okay, so because of these reasons, the core inflation has been decreasing. But a major inflationary pressure India is witnessing due to food inflation. Okay, now why do we have high food inflation? Although the global trend for food inflation is also declining, but India's food inflation has remained firm. And there are various reasons for that. Now, the economic survey says that there is no broad-based issue for food inflation. But in fact, there are just few items which are driving the food inflation, right? It is largely driven by a few commodities and majorly vegetables and pulses. And vegetables also, particularly onion and tomato. Okay. अनियन में बहुत महंगाई है, टमाटर में बहुत महंगाई है, एंड pulses, right? Pulses is witnessing high inflation, right? These items, they have a 8.42 weightage in the CPI, but contribute to 32% to the overall inflation. Okay, so they have an outsized impact on the total inflation. Now, if we exclude these items, अगर इन items को हटा दिया जाए, then the overall food inflation will drop to 4.1%. Okay, demonstrating their outsized impacts. Okay, as you can see, this is the inflation rate in food items. So the vegetables and pulses has very high inflation, which is driving the overall food inflation. Other items, cereals, fruits, eggs, meat, sugar, milk items, oil and fat, spices, they are generally witnessed very low inflation. Okay. Now, why is there high food inflation? There's a role of extreme weather events. Okay. Now, in India, agriculture is still to a very large extent dependent on the monsoon. Okay. And monsoon and other weather events. So if there is extreme weather events like heat waves or droughts, then suddenly there is fluctuations in the production of agriculture produce. So food prices particularly vulnerable to extreme weather events, cyclones, unseasonal rains, floods, droughts, which directly impact agricultural yields. Now, it says that between 2022 and 2024, the frequency of heat waves in India increased to 18% of total days, compared to only 5% in 2020-21. So the number of frequency of heat waves is increasing every year. Okay. Now there is a clear correlation between extreme weather events and higher vegetable inflation that has been observed. Okay. So the more the number of these extreme weather events, more the prices of vegetables will be. And with inflation effects lasting up to 3 months after such events. So the जब भी कोई extreme weather event होता है, तो 3 महीने तक सब्जियों के दाम काफी बढ़े हुए रहते हैं. All right, so there is a direct correlation. As you can see here, the number of heat waves in the last 3 years has been much higher than what it was earlier. Okay, and there is a direct correlation. There is a rise in crop area damage due to weather conditions. So Because of this, more crop area are getting damaged. So if the crop areas are getting damaged, which means the supply is getting reduced. And if the supply is less, then the prices will increase, right? Simple concepts of economics. Now let's talk about each particular item. The onion. Why is the onion price increasing? Now, onion is a staple food item, right? Everyday item you require onion to prepare your vegetables, prepare your uh, meals. Yeah. And it is a key driver of inflation. Now, around 70% of onion is produced in the Rabi season. So, gets produced in the Rabi season, then it is stored for use throughout the year. Okay. Now, if the production declines, then the supply will be there will be shortage of supply. Okay. So there was a reduction in production in 2023, 2024, which led to supply shortages and which led to price rise. Okay. So government is taking various initiatives to control the price of onions because it is a very important item, and onion prices has been known to bring governments down. So has to take special care of onion inflation. For this, government is maintaining buffer stocks. Okay. So 4.7 lakh metric tons is stocked under price stabilization fund. Then export duties imposed on export of onions. Okay. To control price rise. Then subsidized sale the government is doing. The government is selling onion at rupees 35 per kg to ease the burden on consumers. So government is also taking various proactive steps to uh, keep the price of onion stable. Okay. Let's talk about tomato inflation. Why is the price of tomato increasing? Now, tomato, unlike onion, has a very short shelf life. Okay. And there are storage challenges with respect to tomato, right? Because it requires cold storage. So it cannot be stored anywhere like onions. Now, all this makes tomato prices very volatile. Okay. More than onions. Now, tomatoes in India are produced in very specific states, right? So the regional production is concentrated in MP, Andhra Pradesh, Karnataka, Gujarat, Odisha. Okay. And therefore, if there is a supply chain disruption, okay, then the prices will become very vulnerable, right? So it is very vulnerable to supply chain disruptions. Okay. Now, what is the government doing? It is selling tomato as subsidized rates is 65 per kg in October 2024 to control inflation. Now, another food item that is driving food inflation is pulses, specifically the tur dal. Okay. Now, in India, the pulses production remains below demand. So the demand for pulses is higher in India, and the production of pulses is lower, which is leading to supply deficit. So we have to import pulses. Now, the production of tur dal fell by 13.6% in 2023, 22-23, and again 10.8% in 23-24, which caused price spikes. The price of pulses increased a lot. Now, what the government did was started importing from these countries, Mozambique, Tanzania, Malawi, Myanmar, to control the price of pulses. All right. So finally, let's look at some policy recommendations that the economic survey gives to control inflation. So what are the strategies that we should adopt for long-term price stability? One is we have to focus on food inflation because food inflation is the major area where we have not been able to control their prices. So in the long term, we should look for developing a climate resilient crop varieties to protect against extreme weather events. So we must adapt and adopt climate resilient crop varieties. At the same time, farmer training programs can be done to boost their efficiency, boost yields, and Then there can be strengthening of real-time data collection so that there is better price monitoring and policy intervention, right? So that farmers can monitor the prices and produce agriculture items as per the demands in the market. Okay, and also reduce the number of middlemen. The next chapter is titled Medium Term Outlook. Now, in this chapter, we look at the projections of Indian economy in the medium term. We also look at some of the challenges, some of the opportunities, and some of the recommendations for the medium term for achieving high economic growth rate. Now, if we talk about the medium term, we have an ambitious growth target. We, aspire to become a developed country by 2047. 2047 will be 100 years of our independence, and by that time, we want to become a developed country. Now, for India to achieve this, it will have to sustain a real GDP growth rate of 8% per year for the next 2 decades, right? So that is quite ambitious. If we look at the IMF growth projections, then IMF in its publications, the World Economic Outlook, projects that Indian economy will reach $5 trillion by financial year 28, which will further expand to $6.3 trillion by financial year 30, right? Now, for India to achieve this, it will require an annual nominal GDP growth of 10.2% in USD terms. Okay. Now, if we look at this and compare it with what we have been able to achieve in the past, so from financial year 2014 to financial year 24, in the last decade, India's dollar GDP grew by 8.9% per year, right? Now, to even surpass this and grow at a 10.2% as per IMF projections, it shows that there is optimism about India's potential to grow at an even higher rate. Okay. So this is IMF's World Economic Outlook, India's projection. So we'll become $5 trillion economy by financial year 28, and by 30, we are looking at 6.3 trillion US dollars. All right. So that is IMF's projections, but even our domestic economic projections, if we look at, the Ministry of Statistics and Program Implementation has estimated that in financial year 25, our GDP growth will be 6.4%. Okay. And between financial year 26 to 30, the MOSPI has projected that the growth rate will be between 6.3% to 6.8%. Okay. Now, what does this mean? It means that India will continue to be one of the fastest growing major economies in the world, right? But to sustain such high growth rate, there has to be some key policy actions on part of the government, right? And the foremost policy actions that the economic survey suggests is the deregulation. There has to be greater economic freedom for the businesses in India to conduct business, right? There has to be less bureaucratic hurdles, less rules and regulations, right? There has to be enhanced business freedom. Now, if we look at the global level, that we have already seen that there is a geo-economic fragmentation that is going on. Okay. Now, what is this geo-economic fragmentation? So if we look at our recent past, then the era between 1980 to 2010s was an era of hyper-globalization, right? It was an era where international trade, finance, investment flourished. Then there was the great financial crisis of 2008. And after that, we witnessed a somewhat slowdown in the pace of globalization. So it still the globalization was happening, but the pace of globalization slowed down, and we call this the era of slowbalization. Slowbalization. But in the recent years, we have witnessed geo-economic fragmentation. Okay. which refers to reversal of globalization. Okay, now the direction of globalization has reversed, right? There is rising trade barriers. So tariffs or import restrictions or non-trade barriers, as we studied. There is increased protectionism, right? There are trends towards friend shoring. We studied that countries now prefer to do business with friendly countries or politically aligned countries. There is emergence of economic blocks. Then there are geopolitical conflicts happening. For example, the US-China trade war that is happening, the Russia-Ukraine war that is happening, and there is technology decoupling that we can see with respect to restrictions in the semiconductor trade. Okay, so because of all these reasons, the direction of globalization has reversed, and this is what is known as geoeconomic fragmentation. Now, what are the consequences of geoeconomic fragmentation? Obviously, with geoeconomic fragmentation, there will be trade disruptions. Okay. In fact, World Trade Organization has reported a sharp rise in trade restrictive measures in recent years. So the number of trade restrictive measures that the countries are imposing are increasing every year. Okay. This reduces access to foreign markets. Okay. So the number of foreign markets that you can access gets lesser and lesser. It slows the global supply chain. Okay. So these are the consequences of global economic fracturing. As you can see, these are the number of new restrictions per year, right? So in these last few years, the number of restrictions to trade has been growing. Okay. And these restrictions are being imposed due to national security, geopolitical concerns, uh, security of supply, climate change mitigation, right? Strategic competitiveness. So, because of all these reasons, the number of restrictions to global trade are increasing. Now, how will it impact the foreign direct investment in India? Okay. Now, it is bound to impact the foreign direct investment because the FDI is increasingly getting concentrated among geopolitical allies. Okay, so only you will receive FDI from your friendly countries. All right, which means that the emerging markets, including India, may face vulnerabilities due to restricted capital flows. The FDI may decrease in future. Okay, and this will potentially lead to global GDP losses. Global GDP will experience losses. Okay, depending on the severity of fragmentation, IMF has estimated that global GDP could decline by 0.2% to 7%. Now, if technology restrictions are included, GDP losses could even go to up to 8 to 12% in some countries. So, this geoeconomic fragmentation is a major challenge that we are going to see in our medium term. Now, what does it mean for India? Because India is a major attraction for the foreign direct investments, right? So if the FDI reduces to India, then what should India do? So the economic survey says that India must become self-reliant, okay? As traditional global economic models no longer guarantee growth. So India has to look inward and become self-reliant, right? It has to become Atmanirbhar. And a solution to this that's suggested by the economic survey is reducing the internal barriers to business expansion. And what are these internal barriers to business expansion? The rules and regulations, the bureaucratic hurdles that exist in India. So it has given emphasis on deregulation. Right? There has to be greater deregulation in India so that businesses can perform with greater freedom. Okay. Now, another issue that needs to be addressed is that China's dominance, right? Particularly in global manufacturing. Okay. Now, China is famously known as the workshop of the world, right? Now, the China share of global manufacturing used to be 6% in 2000. In 2024, it is around 45%. So 45% of global manufacturing is happening in China. It is matching the combined output of US and its allies. Okay. So China's dominance is huge. In fact, in the strategic industries, China has a major dominance by strategic industries like electric vehicles, critical minerals, lithium, cobalt, nickel, graphite, right? Here, China dominates solar panel production. 80% of the global market share is there with China. Now, why are we talking about this? How does this affect India? Because of this, India is heavily dependent on China for major merchandise, right? Major products. 75% of lithium ion battery imports India is importing from China. Most of the solar photovoltaic components India is importing from China. Rare earth minerals, China controls 70% of global processing. Okay. So again, India is dependent on import from China for rare earth minerals. Now there is a risk because of such high dependency. What is the risk? If China restricts exports, China मना कर दे कि नहीं हम इंडिया को नहीं देंगे, right? Then that will have a major impact on India's renewable energy sector, India's EV sector, because we are dependent on China, right? We will suffer. So, what is the policy response of India to this? India is obviously trying to build up its domestic capacity through production linked incentive schemes, PLI schemes to boost domestic manufacturing. There is FAME India scheme for EV production, Kabil initiatives there for securing critical mineral supply chains. Okay, so India don't want to be dependent on China. It wants to diversify its options and also it wants to become self-dependent. Now, next challenge for India's medium-term outlook is climate change. Climate change is a major issue and it is going to become more and more severe in the future. Now, it is projected that 1% increase in global temperature can reduce GDP by 12%. 12% से कम हो जाएगा GDP, global GDP. Now, the major greenhouse emitters, जो world में है अभी, that is China, US, and European Unions, they have aimed at net zero emissions by 2050, right? So 2050 is still 25 years away. So that is in the meantime, the global temperature can rise to a much higher level. Okay. Now here the key problem is the green energy transition is highly dependent on China because China has dominance over solar photovoltaic panels और critical earth minerals. तो इसके कारण जो ग्रीन एनर्जी ट्रांजिशन जो होने वाला है वर्ल्ड का वो हाईली डिपेंडेंट ऑन चाइना है. Now, what are India's renewable energy goals? India aims to increase solar and wind energy while reducing reliance on coal. So obviously we want to reduce our reliance on fossil fuels and increase renewable energy, majorly solar and wind, right? However, another issue here comes is that China controls 80% of global solar photovoltaic productions. So again, we become dependent on China. Now, IMF estimate is that if trade restrictions disrupt critical mineral supply chains, investment in renewable and EVs could fall by 30%. अगर critical mineral नहीं मिलेगा, then investment in renewables and EV will decrease by 30%, and that will set us back by many years in our aspirations for transitioning into green energy. Currently, we are on the right path. If we look at the total India's installed capacity mix, so our installed capacity in renewable sectors are increasing. For example, so solar photovoltaic cell, this is increasing. Uh, Dependence on coal is decreasing and dependence on renewable energy sources are increasing. Okay, so we are on the path, but again, the issue is our dependence on China. Okay, so the economic survey talks about that we should focus on deregulation and increasing the domestic capacity of India, right? Because the thing that is holding us back is these bureaucratic hurdles, is these rules and regulations in which there is no ease of doing business. So we want to walk on the path of deregulation, right? Now, the regulatory compliance burdens reduces investment efficiency, limits business expansion, increases the cost of MSMEs. Okay. So now if we deregulate and do deregulations, we can become much more efficient, right? Now, what can be the key areas of deregulation? If we are talking about deregulations, what are the key areas we should target? Number one is labor laws, right? We can start by reducing the rigid employment regulations. Then land and building regulations can be simplified. The land use can be simplified. Construction approvals का जो process है उसको simplify किया जा सकता है. Business licenses, कोई भी business license लेने में there is a bureaucratic red tape involved. कितने तरह का permission लेना पड़ेगा. You have forms to fill, right? And that leads to corruption. So business license, there should be reduction in the bureaucratic red tape. Processes should be simplified. For procuring electricity and utilities, the tariff should be lowered. For environmental regulation, there should be a balance, right? A balance between sustainability, but keeping an eye on the economic growth at the same time. Okay. Next is our focus on business reform action plan, right? This is an initiative of the government. Now, through this business reform action plan, a lot of deregulations has been initiated in several states, and we are witnessing some of the success stories here. For example, there are state-led deregulations happening. For example, Haryana and Tamil Nadu have simplified construction permit approvals. Punjab has relaxed building and fire safety laws. Andhra Pradesh and Karnataka has started allowing women to work night shifts in IT enabled services. Okay. So these are the things that can be replicated in other states also. So in conclusion, looking at the medium term outlook for the Indian economy, we can say that there is an urgent need for economic freedom. There is an urgent need for deregulation, which is as important as infrastructure investment. So government has been focusing on infrastructure investment to increase the economic capacity of India, but deregulation is equally important. Okay. Now, unleashing the MSME growth, focusing on MSME growth will drive higher employment, innovation. For example, there are global examples, right? USA, UK, New Zealand shows that systematic deregulation improves the economic efficiency. Okay. And therefore, we should also uh, tread that path of deregulation. So, the economic survey says that India must act now, enhancing economic freedom, not as an option, but as a necessity for sustained long term growth. The next chapter is titled Investment and Infrastructure. Now, what is the role of infrastructure in India's growth? Now, we all know that infrastructure is very important. It leads to enhanced economic capacity of the economy, right? Now, infrastructure is a growth driver. Infrastructure, when we talk about infrastructure, we talk about physical infrastructure like transport, energy, housing. We also talk about digital infrastructure, telecom, broadband, and social infrastructure, health, education, sanitation. That is central to India's development. over the last 5 years, we know that the government has significantly increased public spending on infrastructure. So the capital expenditure component of the government's total expenditure has increased, right? So the quality of government spending has increased in the last 5 years, particularly in the last 5 years. But still, the private investment has not caught up to the government capital expenditure, right? So we need private sector involvement, right? Government funding alone cannot bridge the infrastructure gap. The private sector needs to play a more active role, right? And herein comes the importance of public-private partnership, right? Where the resources and the risks are shared by both the public sector and the private sector. So these PPPs are important for sustainable infrastructure growth, and both the government and the private sector must work together. Right? If we look at the trends of capital expenditure, then we know that the government has been spending more and more on capital expenditure. So between financial year 20 and 24, the government increased capital expenditure in key infrastructure sector by an average rate of 38.8%. So that is a very high rate of increase in the capital expenditure or capex. Now, government has some initiatives. There is the National Infrastructure Pipeline, which is launched as a long-term roadmap for infrastructure investment. So here we are targeting 111 lakh crore of investment in infrastructure investment from financial year 20 to 25. Now the projects in the National Infrastructure Pipeline are monitored, right? Constantly monitored through India Investment Grid, which helps in tracking progress and identifying the bottlenecks. Next initiative of government is the National Monetization Pipeline. So what we are doing here is we are leasing out the brownfield assets to private players. So whatever assets the government has, so it is lying there, the government is not utilizing it. So why not take benefit of that and lease it out to the private players, and through that government can also earn some income, right? So it was introduced in 2021 to unlock value from existing public infrastructure by leasing it out to private players. So the brownfield asset means that it already existed, the infrastructure existed, and it is further utilized by the private players. As opposed to brownfield, there is another term known as greenfield. Greenfield is where you start creating something from scratch, right? So that is greenfield. Brownfield is something that is already existing there. Now, with the national monetization pipeline, the targeted monetization is 6 lakh crores between financial year 22 to 25. 6 lakh crore we want to unlock. Okay. Now, as of 24, financial year 24, 3.86 lakh crore worth of assets have been monetized, with leading sectors being roads, power, coal, mining. Okay. So the existing roads, existing power sector, infrastructure, coal, mines, etc., has been leased out to private players. Now, what are some challenges in infrastructure spending? Where are we witnessing issues in infrastructure spending? First is, at least in the last year, the infrastructure capital expenditure was disrupted by general elections. So obviously, last year was a general election year, and whenever there is general election, there is model code of conduct, right? And during the model code of conduct, the government will not take major initiatives, and also the private sector is a little cautious to invest, right? So there were limited approvals due to model code of conduct. Also, another challenge with infrastructure spending is heavy monsoon. So whenever there is heavy monsoon, the construction activities suffer, right? It affects the progress of infrastructure projects. So last year again was a heavy monsoon year. So heavy monsoon, although it is good for agriculture, sometimes is not good for the infrastructure development. Okay. Now we witnessed the post-election. There has been recovery post-election again with the new government. Again, the infrastructure spending has picked up. It capex picked up, reaching 60% of budgeted allocation for the fiscal year. Okay, so things have again started looking well. Okay, let's talk about all the sectors in the infrastructure. So, starting with the physical connectivity infrastructure, what is happening in the railways? In railways, we are witnessing a steady expansion of rail network. Okay, around 2,282 kilometer of rail network has been commissioned from April to November of 2024. So, now here I want to state that these figures are not important, but you should know that work is going on in this direction, and the railway network has been expanding steadily. Okay, there are also production of a lot many trains and coaches. 17 new pairs of Vande Bharat train has been introduced. Okay, so a lot of works is happening here. Key projects in railways are the Mumbai Ahmedabad High Speed Rail, the bullet train. Now, the bullet train was approved in 2015, is going to be 508-kilometer long, is supported by Japan. So, Japan is investing in the bullet train in India. Now, as of October 2024, around 47% progress has been achieved. So, nearly half the work has been done and half the work remains to be done. Now, another key project is the dedicated freight corridors. Okay. Now, what with dedicated freight corridors, what we are doing is we are separating the freight and passenger traffic. Okay. So the passenger traffics will have, there will be different routes for the passenger traffic and different for the freight traffic. So this will improve the logistics. Okay. So again, 96% of the planned 2,800 kilometer is already operational. So here we are nearing completion. Now, what we are doing for sustainability and modernization efforts in railways, we have a net zero carbon target for Indian Railways. So the Indian Railway aims for 30 gigawatt of renewable energy by 2029-30, where we will install solar power, wind power. Okay. Then there is public-private partnership in railways. Many projects have been completed, many are ongoing. What is happening for passenger amenities? There are Amrit Bharat station schemes. So redevelopment of stations is happening, beautification of stations is happening. Amrit Bharat station scheme. Then there is one station, one product scheme along the lines of one district, one product scheme, right? So every station in every district will showcase products of the local artisans. So it will promote the local artisans, give them avenues for employment. Then there is Wi-Fi expansion that is happening in railway stations. Okay. Next is road transport. What is happening here? Now India is expanding the road network. Our total road length is 63.4 lakh kilometers. But area of concern is that out of these 63.4 lakh kilometers, the national highway network is just 1.46 lakh kilometer, okay, which is just 2% of total roads, but carries 40% of freight traffic. Okay, so the national highways, there is high congestion in the national highways, so there must be something done with the expansion of national highways. Now, next in the road transport, we are focusing on corridor-based development. Okay, so many corridors, road corridors are being developed. So here, some of the initiatives of the government are Bharatmala Pariyojana, right? Under Bharatmala Pariyojana, 34,800 kilometer of national highways will be developed. Okay. Then there is Char Dham Mahamarg Pariyojana, which is a project which will connect the Char Dhams, 820 total of 825 kilometers. Okay, out of this Around three-fourth is already completed. Then there is high-speed corridors that are being developed, okay, which will be expanded. So in 2014, it was only 93 kilometers. Now it is around 2,474 kilometers. Now, what are some sustainable initiatives that is happening in the road transport? One is multimodal logistic parks that are being developed, right? So this will reduce the logistical cost. So multimodal logistical parks, which means it will have multiple modes of transport. Okay, so trains, roadways, waterways, all will be part of these logistical parks. Then there is a vehicle scrapping policy. A lot of vehicles which gets old, which can no longer be driven in the roads. For example, Delhi has a policy of particular number of years for petrol vehicles and for diesel vehicles. So all the vehicles which are scrapped, right? So vehicles are getting scrapped. So there is a vehicle scrapping policy. Then there is ropeway transport development that is happening, particularly in districts with high tourism potential. So ropeways are being developed there. Next is civil aviation. What is happening here? Now there is air connectivity growth. So the government scheme, the UDAN, Regional Connectivity Scheme, Ude Desh Ka Aam Nagrik, RCS, Regional Connectivity Scheme is there, through which even the tier 2 and tier 3 cities are getting airports and air connectivity, right? So here 88 airports, including two water aerodromes and 13 heliports are now connected. There is also airport expansion happening with increase in the cargo handling capacity. Next is port and shipping. Now, in port and shipping, we are enhancing the maritime infrastructure. So, many projects of the government, like Vadhavan Megaport, the Sagarmala program, which is leading to port-led modernization. So, modernization of ports, more connectivity, boosting coastal shipping. We are also focusing on international port linkages, right? So in the Chabahar port, which is in Iran, there is 43% rise in vehicle traffic. So greater international port linkages is happening. Similarly, with respect to Sitwe port in Myanmar, now this has led to enhanced northeast connectivity. Next, let's talk about digital infrastructure. Now, in digital infrastructure, there has been a 5G rollout. In fact, 779 out of total 783 districts in India are already covered with 5G network, right? So they already have high speed 5G networks. Then telecom expansion is also happening in remote areas. Here the program is BharatNet of the government, where optical fiber is being laid in these remote areas. It includes northeast islands, border areas for them to receive enhanced connectivity. Now, India is also becoming a growing data center market. So it is becoming a data center. Current capacity and this data center market is expected to now become a market size of $11.6 billion by 2032. So there is great scope in the future of India becoming a data center market. Next, let's talk about rural infrastructure. What's happening in rural infrastructure? So a lot of schemes of the government going on for drinking water. There is Jal Jeevan Mission, which is providing safe drinking water to households. So 79% of rural households now have tap water connections, which ensures safe drinking water, right? Then there is Swachh Bharat Mission Grameen for sanitation. 3.64 lakh villages are now declared ODF plus. So they're open defecation free, but also The plus indicates that there is also provision for waste management and hygiene. Okay. Then some successful waste management models have been developed in Kerala and Madhya Pradesh, which can be replicated all over India. The next, let's talk about urban infrastructure. Urban infrastructure also, there are a lot of initiatives of the government going on. There is Swachh Bharat Mission Urban, which is ensuring garbage-free cities, solid waste management. Then if there is smart cities mission of the government. Smart cities mission will bring in smart solutions to all the issues of the cities, right? IT integration uh, will happen. 100 cities are to be made smart cities with integrated command and control centers. So all the things, the sanitation or be it the traffic, everything will be controlled from a integrated command and control center. Next is Pradhan Mantri Awas Yojana Urban, in which a lot of urban housing, affordable urban housing is being provided. In fact, urban primary Pradhan Mantri Awas Yojana Urban 2.0 is to be launched. So in conclusion to this chapter, we can say that there are challenges to infrastructure investment. Particularly, there is lack of private sector participation in infrastructure, right? So majority of the investment is coming from the government sector. So there is a need for more private sector participation. For this, there will be more public-private partnerships, also crowding in of private investment. For that, there is need for better risk sharing, contract enforcement, and better financial models through which the private sector can also invest in infrastructure. Now, if we talk about the future vision, then India should aim for a sustainable, disaster resilient urbanization, and there should be more emphasis on public-private partnerships, renewable energy, and last mile connectivity. Next chapter is industry. Now let's start with looking at the global background of industry. Now, if we look at the global manufacturing landscape, we see that there is a redistribution of market share, right? So earlier, the high income uh, countries used to dominate the manufacturing landscape, but now, at least over the past decade, high income countries have lost a significant portion of their manufacturing share. So high income countries में manufacturing अब कम हो रहा है because they have moved on to services, right? As economies grow, economies generally see a transition from agriculture to manufacturing to services. And this uh, loss of the high income countries has been captured by the upper middle income countries and primarily China. Okay. So China has become dominant in the manufacturing sector. Now, the lower middle income countries, which includes India, India is right now a lower middle income country, they have struggled to gain large share, right? So although India has managed to expand its presence, but as compared to China, it is still quite behind. Okay. If we look at the share of global manufacturing output, India accounts for 2.8% of global manufacturing output, which is significantly lower than China, which accounts for 28.8% of global manufacturing output. So there is a huge gap between India and China. Now, this represents opportunities as well as challenges for India. Now, what are the opportunities? There is an upside potential. India is well positioned to benefit from global industrial diversification. So, the globally, the countries are diversifying, right? They have witnessed the pandemic induced disruptions. They have witnessed wars, the Russia-Ukraine war, the wars happening in the Middle East. And because of that, the countries now want to procure their imports from diversified sources, right? So you must be hearing about China plus one strategy, right? What is China plus one? The countries want to, who are importing from China, they want at least one other another destination from which they import. Okay. So now India can benefit from this. The increasing preference of shifting manufacturing bases away from China due to geopolitical and trade related concerns could work in India's favor. So there is an opportunity there. Now, what are the challenges? Several nations have implemented protectionist industrial and trade policies. So we were talking about economic fragmentation, right? So because of the protectionist policies of the country, they may not be inclined to import from India. Okay, restricting foreign competition to support their domestic industries. So countries want to procure domestically and not from other countries. Furthermore, another challenge is commodity price volatility because the global um, trade situation is very volatile, right? Now, because of that, there is volatility in commodity prices, which has shifted global consumption patterns towards services rather than manufactured goods. So now people are spending more on services and less on manufactured goods. So these are challenges to India. Okay. Now, if we look at the global manufacturing sector, there are also challenges here, facing numerous headwinds. Headwinds means things that are slowing this sector down, slowing the global manufacturing industry. One is the supply chain disruptions. Now, supply chain disruption can happen due to a lot of factors, post-pandemic issues, geopolitical conflicts, logistical inefficiencies. We saw there are issues in the Red Sea, there are issues in the Strait of Hormuz, there are issues in the Panama Canal, okay, which leads to increased delays and cost. There is geopolitical instability. There is trade war happening between USA and China. There are regional conflicts that are happening. There are conflicts happening in the Middle East, particularly Israel and Hamas and other countries. There are shifting alliances which are influencing production decisions. So there is friend shoring and near shoring that is happening. Okay. At the same time, there are environmental pressures. Okay. There is a growing push to reduce carbon emissions. So, at least the developed countries want all the countries to reduce their carbon emissions, integrate renewable energy sources, adopt sustainable manufacturing practices. And sometimes it is not possible for a low middle income country like India to adapt to these pressures. Okay. Then there are rising logistical costs. So the fuel price can increase, transportation bottlenecks, as we have seen in the Red Sea, also in the Panama Canal, the transportation not bottlenecks that are there that can drive up the manufacturing cost. Okay. So the global manufacturing industry is facing these numerous challenges. The manufacturing growth has slowed globally. This suggests that India must focus on internal growth strategies. So now the export options are less for India, are limited, and therefore India must focus on internal growth strategy because even the internal market of India is quite huge. There is a domestic consumption demand that is high, right? So rather than relying on external demand, India can look inwards. That is what the economic survey is saying. Now, what are some recent domestic developments that has happened? Now, if you look at the Indian industrial sector, we can broadly divide it into four key subsectors. So, mining and quarrying, electricity, gas supply, utilities, manufacturing, and construction. Okay. So now in this four subsectors, the contribution of mining and is generally quite less, but these are major contributors to the industrial sector. Now, uh, if we look at the recent domestic developments, there was the impact of COVID-19 pandemic. So we witnessed nationwide lockdowns. Okay. Now, during the pandemic, there was sharp contraction in the industrial sector. Obviously, because there was lockdown, there was no economic activity going on. So sharp contraction हो गया था. Okay. But after the lockdowns, the industrial growth has been volatile. Okay. So there is no clear picture. Sometimes the growth rate is very high, sometimes it is low. So a lot of volatility is there. The industrial sector saw a 6.2% growth rate in financial year 25, which is higher than previous 5-year average, mainly driven by electricity and construction. So a lot of um, investment happened here, electricity and construction, mainly by the government spending. And because of that, this 6.2 growth rate has been achieved in this financial year. So what are the challenges in the industrial sector? Now the exports have slowed down, okay, because of economic troubles in key export markets, right? Our major export destinations, particularly Europe, there is a economic slowdown in Europe, so the demand is less, so the export have slowed down, coupled with intensified global trade competition. The competition has also increased a lot. Many other countries are also now exporting. For example, Bangladesh, Vietnam, these have also exporting a lot many manufactured items. Okay. So first is that. Second is monsoon variations, which has a mixed effect. So monsoon is good for agriculture. So it is positive because it replenishes our water reservoirs, supports agriculture, but it is negative for the construction sector, right? Or mining, construction, manufacturing, which gets disrupted, leading to reduced productivity. So that is another challenge. Third is, and particularly this is for financial year 25, the festive season disruption. So during the major festive seasons, there is a rise in demand, right? Because festival रहता है right around the Diwali season, Dasara Diwali season, people spend a lot of money, right? Now in financial year 24, the major festivals which drive consumer demand occurred in October, whereas financial year 25 they were in September, causing us a temporary statistical dip. So it is not something that is a challenge, but just uh, an occurrence that in this particular year, the uh, major festivals were in different months. That led to, the manufacturing was not able to project that high rates of growth. Okay. But despite all these challenges, the business optimism remains strong. If we look at the performing managers index, purchasing managers index of manufacturing, then it is much above 50. So if it is above 50, which means the sector is expanding. So, right, it was 56.4 in December of 2024. So despite these short-term challenges, the overall environment, the overall business optimism remains strong. Okay. If we look at PMI manufacturing, you can see that it is higher than 50 at 56.4, which means that the sector has been expanding. Okay, there is optimism. Now let's look at individual industrial sectors. Let's start with cement industry. Now India is world's second largest cement producer after China. Okay, we have a production capacity of 639 million tons annually. But herein lies an issue. Our consumption per capita of cement is much less than the global average. Okay. Per capita consumption for India is 290 kg, whereas the global average. So there is scope for increase in the consumption of cement. Okay. Now, what can lead to this increase? Infrastructure projects for building of highways, railways, urban development requires a lot of cement. Government for schemes are also focusing on rural housing. So a lot of cement demand is also going to come from there. So these will lead to increase in the consumption of cement, and that can lead to higher rate of growth in the cement industry. Next is steel industry. Now, what are the demand drivers of steel industry? Because steel is another important material used in construction, in infrastructure projects, right? And government is spending a lot of money on infrastructure projects, so it is leading to high demand of steel. There is a national steel policy, a lot of PLI schemes. So PLI schemes are also there in the steel industry. Now, if we look at the trade trends with respect to steel, India has been a net importer of steel due to cheaper international prices. So internationally, the price of steel has been quite cheap, which has led to India importing a lot of steel. Okay. Now, what are some sustainability initiatives in the steel industry? There is a scrap recycling policy, right? So steel can be recycled. Okay. So there is scrap recycling policy which reduces emissions, improves efficiency, because recycling obviously will improve efficiency. Scrap use can reduce water consumption by 40% and greenhouse gas emission by 58%. Okay, so obviously steel industry requires a lot of fuel burning, so it is highly polluting. So if we start scrap using scraps, then we can reduce water consumption and greenhouse gas emissions. Next is chemical and petrochemical sector. Now, chemical sector contributes 9.5% to India's manufacturing GVA, right? So इंडिया का जितना भी मैन्युफैक्चरिंग ग्रॉस वैल्यू एडेड है उसका 9.5% केमिकल सेक्टर से आता है. Now, what is a major key issue in this sector is we import 45% of petrochemical intermediates, increasing our dependence on foreign suppliers. So बहुत ज़्यादा import करते हैं, so we have to increase our domestic capacity, right? So in future, we have focus much in reducing import dependency by expanding domestic production. Next, let's talk about the capital goods industry. Now, we all know what capital goods is. Capital goods is used to produce uh, machines which will again be used to produce consumer goods, right? So can more capital goods capacity means that the economy is expanding, right? But in capital goods, we are heavily import dependent. Our domestic capacity of producing capital goods is not very high. Okay. Now, what are the key challenges? There are technological gaps, skill shortages, infrastructure constraints. So, because of all these reasons, we become quite import dependent on capital goods. Now, what are some government responses with respect to capital goods industry? There is the capital goods competitiveness scheme to improve self-sufficiency in capital goods. So that is now phase 2 of this scheme is right now going on. Then there is smart manufacturing industry 4.0 initiatives, right? So industry 4.0 means more digital goods, right? So increasing our capacity on producing capital goods, which can produce machines which can then again produce digital gadgets, mobile phones, or chips, integrated chips, televisions, refrigerators, right? So that is Smart Manufacturing Industry 4.0 initiative. So examples are your Samarth Udyog centers, which will help industries to adopt automation and advanced technologies. So government is also working in this space. Next is electronic industry. Now, electronic industry is a success, sort of a success story for India's manufacturing, right? Um, if we look at the total production in electronics industry in financial year 15, it was 1.90 lakh crore. It increased to 9.52 lakh crore in financial year 24 with a compounded annual growth rate of 17.5%. Okay. 99% of mobile phones are currently produced domestically, right? Earlier, many mobile phones were imported from other countries, be it China or Korea or Japan or USA, right? Those were imported, but now 99% of mobile phones are produced domestically. Even, in fact, we are now exporting. So the mobile exports grew from zero financial year 16 to 88,000 crores in financial year 23, right? So we have, from a net importer of mobile phones, we have become a net exporter of mobile phones. And in this area, the government, which has run PLI schemes, have become a major reason for significantly reduced import dependence. Next, let's talk about textile industry. Now, the textile industry has a 11% share in manufacturing gross value added. India is sixth largest textile exporter globally. Now, we have already discussed what are the various challenges of textile exporting. Our textile export is mainly mm, um, uh, related to cotton-based textiles, whereas the global demand has moved on to more synthetic textiles. Okay. Now, one of the challenges here is this sector is dominated by MSMEs, micro, small, and medium enterprises, and therefore there is issue of efficiency at scale, right? The larger the company, more will be the economies of scale. They will be able to produce goods at a cheaper price. But since more and more micro, small, and medium enterprises are involved in textile sector, so they struggle to achieve efficiency and scale. All right. Next, let's talk about a very important issue in industry, that is research and development. Now, why is research and development important? Because if we see all the major economies in the world, they are highly innovative economies, right? Innovation and technological advancement are key drivers of industrial growth, right? Now, India, although has a strong intellectual property ecosystem, right? We have a intellectual property rights policy, but there are challenges in R&D investment. Our investment in research and development is very less. Also, the private sector participation in R&D is very less. Most of the R&D investment comes from the government, right? So unless there is greater participation of private sector in R&D, we will not become a very innovative economy. Okay. Now, India, just by the virtue of so much people living here, we rank sixth globally in patent filing. Okay, so our number of patents that we are filing every year is increasing. In fact, patent filing has more than doubled since 2014-15. Women applicants in patent filing have grown from just 15 in financial year 15 to 5,000 in financial year 24. So more and more women are also participating in research and development, which is a good sign. Okay. But if we look at the R&D investment, and this is where there is major concern. Our GERD, which is gross expenditure on research and development, is only 0.64% of GDP. Whereas countries like China, it is 2.1%. USA it is even higher, 3.4%, and Korea even higher at 4.8%. So these countries are spending a lot of money on research and development, whereas India is not. And therefore, we are lacking behind in innovation. Okay. Now, even here, the government accounts for majority of R&D spending, unlike other countries. So in other countries, the private sector is the major contributor to research and development. The private enterprise contributes 70% and more in other countries, whereas in India, the government is involved in R&D. Now, what are the key sectors in which research and research and development is happening in India? Top is pharmaceuticals is leading, followed by IT, defense, and transportation. All right. So in this graph, we can see that the intellectual properties are growing fast in India. The number of patents filed is increasing, patents grants are increasing, trademarks filed are increasing. So a lot many R&D is happening, but there is scope for more. Now, this is very telling. The R&D spending in India is at even less than 1% at 0.64% of GDP, right? Whereas in some very highly innovative countries, it is much higher. As you can see, Israel, it is higher than 5%. Korea, South Korea, almost 4.8%, right? Sweden, United States, Germany, Denmark, Finland, so all these highly innovative countries that they're spending a lot more money on R&D. Okay. Now, there are some government initiatives to boost R&D. There is expedited patent examination that is now happening for startups, small and medium enterprises, academic institutions. There has been fee reduction for MSMEs, educational institutes who are filing for intellectual property. Then IP Sarthi chatbot has been developed to assist businesses in patent and trademark registration. So there is a chatbot. Then technology transfer organizations has been set up to commercialize innovations. So innovation is one thing, but unless until you commercialize that innovation, there is no benefit, right? So you want to be able to commercialize, and that is where this TTO comes in, technology transfer organizations. Now, what are the challenges that we have? One, obviously, is over reliance on government funding. So we want more private sector contribution. Second is our R&D is concentrated in few sectors. So in pharmaceuticals, IT, defense, we are spending, but other sectors, we are not spending as much. Okay. Third is need for more applied research. So we want our innovations to be market ready, right? So from the laboratory or the workshops, we want the innovations to become final products which can have a market fit, which can be launched in the market. Okay. At the same time, another challenge is the weak industry academia collaboration. There is not enough collaboration between the academia and the industry, and this is limiting the technology transfer. Okay, so these are the challenges. Now, if we compare the incentives given for R&D with other countries, right? So the many uh, innovative countries, developed countries, they offer a lot of incentives for R&D. For example, China offers large tax deductions, financial subsidies. South Korea provides tax credits to high-tech and strategic sectors. USA gives market-driven tax credits, right? So there are a lot of incentives in these countries for R&D. So it is required that in India also, the government should start giving these incentives so there is more private sector participation in research and development. So India does have tax exemptions, grants, soft loans, but there needs to be improvement, right? More improvement is required. All right. In industry, now let's talk about MSMEs, micro, small, and medium enterprises. Now it is MSME sector is the backbone of Indian economy. After agriculture, so agriculture provides most number of employment generation in the country, but after agriculture, it is MSME, right? This micro, small, and medium enterprise. They employ 23.24 crore people in India, right? So out of the population of 140 crore, 23 crore people are employed in MSMEs. Now, what are the initiatives that the government has taken to formalize MSMEs? Because it is very important to formalize MSMEs because most of the MSMEs are informal. They do not have access to formal credit, so do not have access to banks, do not have, are not paying taxes, right? So formalization is necessary. For this, government has Udyam registration portal where the MSMEs are registered with help of their PAN cards. There is Udyam Assist platform, which is helping formalize informal micro enterprises and making them eligible for financial benefits, right? So once you enter the formal structure, then you become eligible for lot many initiatives, lot many benefits that the government is giving, right? Tax benefits and also become eligible for various schemes that the government is running. So here we can see that there is increased registration in the Udyam portal. So every year, more and more number of MSMEs are getting registered in the Udyam portal. Now, next, let's see what are the initiatives for giving financial support and credit to MSMEs. There is the revamped credit guarantee scheme. So there is a credit guarantee scheme which here the guarantee fees has been reduced by 50% to ease the borrowing costs. So more and more MSMEs can borrow money from banks, formal institutions with ease. Okay. Then there is a self-reliant India SRI fund, which is a 50,000 crore fund launched to provide equity financing to MSMEs. So what is equity financing? Equity financing is when you sell a part of your company to some investor and the investor will give you money, right? So for this equity finance, there is a SRI fund where out of 50,000 crore, 10,000 crore is from government and 40,000 crore from private equity and venture capital firms. Then another initiative by the government for benefit of MSME is TREDS, right? Trade Receivables Discounting System. Now, what is TREDS? It is an online marketplace that enables MSMEs to get early payment from government department, PSUs, large corporations. So suppose MSME has received an order from another company for providing them some goods, right? Now that another company will give them money only after the work is completed. In the meantime, the MSMEs may not have enough corpus of money available with them to produce those goods and services. So they will go to some banks or government departments and procure money through TREDS. Okay. So this is a very good initiatives which solves a lot of issues that the MSMEs face in India. So what are the advantages of TREDS? MSMEs get paid without risk. Okay. So they get financing. There is competitive auction based funding, right? So there is auction of who will fund the MSMEs, and therefore The borrowing cost is reduced for the MSMEs. Goa, Tamil Nadu have used TRED successfully, ensuring faster payments to suppliers. Okay. Now, another initiative for MSMEs is the MSME Samadhan portal, which helps businesses report delayed payments. So, if the payment is delayed, they can report to MSME Samadhan portal and their issue is resolved. Then another initiative is MSME Cluster Development Program, which focuses on technology improvement, skill development, market access. So with MSME Cluster Development Program, clusters of MSMEs are established, and because of this cluster approach, their economies of scale improves, so the productivity will increase, right? And it is seen that even the turnover has grown by 20 to 30% for businesses in the clusters. All right. Next, we see state level industrialization patterns. So we see that different states are performing. Uh, there is variation in the performance of different states, right? So large vary significantly, and that is influenced by historical factors, geography, state specific policies. Also, different states have different kinds of policies, and that is why we are witnessing uneven industrial growth. Okay. The top industrial states in India are Gujarat, Maharashtra, Karnataka, Tamil Nadu. They account for 43% of industrial gross value added, whereas the least industrialized states are Northeast, except Assam and Sikkim, Bihar, and Jharkhand. So historically, these states have been less industrialized. Also, the geography of Northeast, at least Northeast Jharkhand, do not allow for greater industrialization, right? So because of these factors, there is uneven industrial growth. Here, there is a initiative that is known as Business Reform Action Plan of 2020. So BRAP 2020 assesses the state level ease of doing business. So different states have different ease of doing business. So it categorizes the states as top achievers, achievers, aspirers, and emerging business ecosystems. Okay. So there is healthy competition between states to get ahead in ease of doing business. So this will lead to more investment coming to the states. Okay, so there is a clear correlation between ease of doing business and industrial activity. The easier it is to do business in that state, the more industries will be attracted to that state. Okay. All right. So the economic survey gives some policy recommendations to strengthen the industrial growth in the country. Okay. One is deregulation. We have talked about this in length. Deregulation should happen. The bureaucratic process has to be streamlined. The compliance burdens for MSMEs has to be reduced. Contract enforcement must happen. Then there has to be enhanced R&D, research and development, where private sector should invest more. There has to be more industry academia partnership, more applied research for commercial application. Then for reducing import dependence, we must develop domestic manufacturing capacity in capital goods, coal, chemicals. There should be steps taken to strengthen the supply chain resilience. Okay. Then for MSME support and formalization, there has should be expansion of access to credit. So more credit should be given to MSMEs. There should be improvement in market linkages through e-commerce, trade platforms. Now, for state level industrial strategies, sector specific specialization based on regional strengths. So different state have different strengths. So that must be identified, and then sector specific specialization must be given to each state. There should be encouragement of regional industrial hubs depending on the strengths of the states. The next chapter is services. Now we know that of all the sectors of economy, the agriculture, the industry, the services is the most productive, right? In fact, it contributes 62% to global GDP. And services the primary driver of growth for middle income countries like India, China, Thailand, right? Because the services sectors grows at a much higher rate than industry and agriculture. Now, despite slowdowns in regions like Euro area, the European Union is experiencing slowdowns, so there is reduction in demand, but still the service sector has remained resilient because of its dynamic nature. So, due to global supply chain disruptions, majorly the uh, manufacturing sector suffers, but the services sectors are very dynamic. So even we witnessed during the pandemic, many of the services sectors, they were able to adapt quickly and shift to the online medium, right? So they have remained resilient, but still some challenges do persist in the services sectors. There is high service inflation right now in the global economy, which is caused by higher nominal wage growth compared to pre-pandemic levels. So the service sector, the people in the service sector are uh, experiencing high nominal wage growth, and that has led to high service inflation. Another challenge is global supply chain disruption. Although the service sector is very resilient, but still there are effects on the service sector also due to global supply chain disruption, which has happened due to geopolitical tensions, including protectionist trade policies. We have talked about this. Conflicts, climate challenges are there. All right, let's talk about India's role in global services exports. Now, services sector obviously is India's strong area, right? Now, India's share in global services exports has steadily risen over 2 decades. Okay, so for 2 decades, we have been performing very well. In fact, we rank seventh globally in terms of services exports and hold a share of 4.3% in global services export. Okay. Now, if we talk about other dominant countries, then US dominates in global services exports, accounts for 13%, UK at 7.4%, Germany is 5%, China, Ireland, France at 5% each. And then after that, at seventh place comes India at 4.3%. Now, the growth in services exports have been very crucial because India has a deficit in merchandise. In goods, India has a deficit, and therefore the service sector surplus, the service export surplus compensates for the deficit we have in the merchandise sector. Okay, so it is balancing India's external trade and compensates for fluctuations in the merchandise export. Okay, now if we see here, this is India's share in the global services and merchandise export. So in services, we have 4.3% of global share, whereas in merchandise, we account for only 1.8%. Now let's talk about India's service sector performance. Now the service sector has been the most stable contributor to India's gross value added. Yes, greater than 50% contribution is there. In financial year 14, the service sector contributed 50.6% to total GVA, which increased to 55% in financial year 25. So the contribution of service sector has been increasing. It employs 30% of India's workforce. Now, if we talk about its contribution in economic growth, then the service sector has maintained a growth rate of above 6% in past decade, except of obviously the pandemic year in which there was negative growth. But apart from that, greater than 6% growth has been witnessed in the services sector. Post the pandemic, the average growth has been even higher to 8%. Okay. And in the post-pandemic period, from financial year 23 to 25, the growth acceleration has been at 8.3%. Okay, so we can see here um, the growth in services in the pandemic year. Obviously, there was negative growth, but after that, it has been at very high level at 8.3%. If we look at the services sector share in the total GVA, gross value added, then again it has been increasing. Then it decreased in pandemic year. Then after that again it has picked up, right? And it now accounts for 55% of total GVA. Now, if we look at the purchasing managers index, we know that above 50 value means that the sector is in expansionary zone. So it has remained in the expansionary zone after the pandemic and is currently at 59.3%. So overall, we can say that the services sector has been performing quite well. If we look at trade and services, then our services exports grew at 11% between financial year 14 to 23. And the key contributor in our exports, the services that we export the most is computer services. A lot of software engineers in India and a lot of software is exported to other countries. Also, business services. A lot of business services will include legal services or consultancy services, right? They account for, together, they account for 70% of India's total services exports. Okay. Now, important thing here is both the computer services and business services can be done remotely, right? So whenever there is global disruption, some supply chain disruption or a global conflict, then these are the services that will be least affected. Okay. Now, the consistent rise in service exports have offset weakness in other economic sectors. So obviously the merchandise, we have always have a deficit. So that is offset by our surplus in the services sector. Next, let's talk about the financing in the services sector. So how much credit the bank is giving to the services sector. So again, the total outstanding bank credit stood at 48.5 lakh crores with a year-on-year growth of 13%, which is quite a good number, right? 13% overall increase in credit to services sector. Now, even here, we see that the banks are giving loans to the most productive um, subsectors of services, which is computer software services, which is witnessing very high growth. So the highest increase. Then professional services, again, witnessed very high growth, high levels of growth. Okay, indicating rising business investments. Now let's talk about each of the subsectors of services. First, the infrastructure and logistics based services, which is Indian Railways. Now, Indian Railway is the world's fourth largest rail network, right? After USA, China, and Russia, we have the fourth largest rail network. Our passenger traffic grew by 8%, freight traffic grew by 5.2%. So, good growth in both passenger traffic and freight traffic. Now, the Indian Railways is witnessing digital innovation. E-ticketing now accounts for 86% of reserved sector bookings, right? So most of the people are booking railway tickets online. There is QR code based payment systems for seamless transactions in railway services. So you can scan the QR code and make payments for the railway services. The refund process has improved. In fact, 98% of eligible cases received refunds within 24 hours. So it has improved a lot. Now in tourism sector, there is an initiative of Indian Railways, that is Bharat Gaurav Trains, which is launched to promote theme-based tourism circuits. Okay. Next service is the road transport service. Now, the road transport dominates the transport sector, accounting for 78% of transport GVA. Okay, so out of all the transport sectors like railways, civil aviation, waterways, the road transport dominates, accounts for 78% of total GVA. Now, here, what are some initiatives that has taken place? There is digitalization of tolling. So, whenever you cross a toll, you don't have to physically give the toll amount to the person there. It is automatically deducted from your FASTag, right? So there is FASTag adoption, which has reduced the average waiting time at toll plazas, which used to be 734 seconds earlier. Now it is reduced to 47 seconds. Okay. So it has become much more efficient. There is barrier. Now there is plan to introduce barrier-free tolling. So right now you have to stop at the tolls and the amount is deducted. In future, there will be no toll barriers and your vehicle just cross that area and toll will be automatically detected. Okay. So this will be introduced across highways by financial year 29. Now, in terms of road safety, there are provisions for cashless treatment for accident victims that has been introduced. There is also a project known as Abhay project, which is for truck driver healthcare programs. Next service is aviation. Now, in the aviation sector, India is the fastest growing aviation market. Okay, so because a large number of Indian population is joining the middle class, and within middle class, the demand for air travel is also increasing. So India has become the fastest growing aviation market right now. Both the passenger traffic and aircraft orders are increasing. Okay. Now the newer sectors in aviation is drones and maintenance, repair and overhaul sector, which is booming, right? So around 26,000 drones are registered. 32 air leasing companies has been established. So these air leasing companies buys the airplanes and then leases them to airlines. Okay. So that is also becoming a very lucrative industry. Next is ports and waterways. Now, in financial year 24, India's major ports handled 819 metric tons of cargo. The government of India has come up with Maritime India Vision for 2030 and Amrit Kal Vision 2047, which is aimed to make India a global leader in shipbuilding, right? So we want to become a global leader in shipbuilding. Now, in inland water development, we have 26 operational waterways covering 4,800 kilometers. And even the passenger movements in the inland waterways has increased to 3.36 crore in quarter two of financial year 25. So obviously these data is not important, but you must know that these are the initiatives that are there. Okay. Next, in business and IT services, we have developed many global capability centers, right? Now, earlier, India used to be the back end office of global companies. We used to provide call center and BPO services. Now, many of the multinational companies are establishing their global capability centers in India because India has highly skilled workers who are willing to work at cheaper rates, right? So global capability centers are getting established in India. The India's IT sector recorded a $254 billion in revenue in financial year 24. 60,000 new jobs added. Total workforce of India's IT sector is right now at 5.43 million. India hosts 1,700 plus global capability centers employing 1.9 million professionals. So again, this is a high productive and high growth sector of Indian economy. Okay. Next, let's talk about the influence of artificial intelligence services. Now, artificial intelligence, and there is also a separate chapter dedicated to artificial intelligence in the economic survey. We'll look at it. So, AI adoption is transforming the services sector also. For example, in the banking, it is used for fraud detection, automation in retail for personalized shopping recommendations, logistics for route optimization, in telecom for network efficiency. So, artificial intelligence is transforming the services sectors in many ways. In conclusion, we can say that India's services sectors remain resilient, but there are risks. Now, what are the risks? There are changing global regulations. We have seen there is global economic fracturing that is happening. And because of that, um, there are challenges for services exports also. There is rising inflation, mainly due to rise in nominal wage growth of services, service sector employees, and there is geopolitical disruption. So these are the challenges that exist in the service sector also. What are some key policy recommendations that has been given in the economic survey? That there should be skilling of workforce in digital and AI technologies, because digitization and artificial intelligence is going to be the future. So there should be skilled workforce available in India. At the same time, there should be simplifying business regulations at grassroots level so that there is ease of doing business. And then there should be strengthening of manufacturing and services interlinkages, because many manufacturing sectors also require services, right? So there should be greater interlinkage here so that both the sector, the manufacturing sector also and the services sector also grow at a very fast rate. Next chapter is agriculture. Now, agriculture and allied activities has historically been the backbone of India's economy. In financial year 24, the sector contributed 16% of India's GDP. So the contribution to the GDP is less, but very importantly, it employs 46.1% of the population. Okay, the average annual growth rate for since for financial year for 17 to 23 has been around 5%. Okay. Now, why is this growth important? Because agriculture's stability directly influences food security. Okay. It influences food security, rural employment, because majority of the rural population are involved in agriculture, and hence it leads to overall economic stability. Now, if the growth rate in agriculture is high, then it will reduce distress migration. So, distress migration means because of lack of employment opportunities in villages, many of the village population migrates to urban centers in search of jobs. So, distress migration will reduce, and at the same time, food prices will stabilize. Okay. So, therefore, growth in agriculture sector is very important. Now, if we look at the performance of agriculture sector, the major contributor to its growth is minimum support prices. Now, this MSP system ensures that the farmer received a fair price for their produce, which reduces their income volatility. Okay, so they're at least assured that they will get a fair price for their produce. Now, another crucial factor is institutional credit expansion. So earlier, a lot of credit that the farmer used to get, or the loans that the farmer used to get, was through informal sources, through money lenders. And then money lenders had very exploitative practices. They used to charge very high rates of interest. Now, more and more farmers are able to take loans from the banks. So institutional credit expansion has happened, which allows farmers to access financial resources which they can invest in seed, irrigation, fertilizer, modern equipments, machineries, etc. Another important factor in agriculture is role of weather. which remains pivotal. Now, India is still to this date majorly dependent on good monsoon for a high agricultural growth. Okay, a good monsoon year leads to better yields, while droughts and erratic rainfall can significantly impact production. So, therefore, in future, as this extreme weather events will start increasing, we must move towards climate adaptation, right? And we may also expand towards allied activities like fisheries, animal husbandry, which are increasingly becoming very important. If we look at the key statistics, specifically the Kharif production, then there was 1,647 lakh metric tons of food grains that was produced, which was an increase of 89 lakh metric tons from previous year. In fact, uh, the Kharif production last year has been at record levels. Now, a rise in food production directly strengthens food security, ensures stable grain reserves, and helps control inflation. Okay. If we talk about agricultural incomes, then the agricultural income has grown at a rate of 5.23% annually over the last decade, which is still lower than non-agricultural income growth. In fact, the non-agricultural income growth has been at a higher rate at 6.24%, which means that the people involved in agriculture are seeing a lower rate of income growth. Okay, so this shows that the while the agriculture is growing, it still lags behind sectors. So there is need for policy interventions to enhance farm profitability, right? And therefore, the government has started various initiatives to double the farmers' income. So here you can see the production of major kharif crops. Almost all the major kharif crops have witnessed slight increase. Okay, except some pulses like urad has seen a decline, ragi has seen decline, but other crops has seen increase in production. Now, let's talk about the subsectors of agriculture. Now, in agriculture is not a monolithic sector. It is not just one sector. There are various subsectors of agriculture. So let's look at various subsectors of agriculture. The major subsector is obviously the crops. Okay. Now, Indian crop sector has grown at a modest compounded annual growth rate of 2.1%. So the crops in since financial year 13 to 22. So the annual growth rate of crop sector has not been very high. Now, why is it slow? Because the staple food crops like wheat and rice have low productivity levels as compared to global standards. Okay. So wheat and rice productivity levels in India is quite low as compared to some of the other countries. But some bright spots in this sector is fruits, vegetables, pulses, which have seen notable increases in production. And this also reflects the changing consumption pattern in India. So as the per capita income of India grows, they will start demanding more and more variety in their diet. So this will increase the demand for fruits, vegetables, and pulses. So these are the crops that has seen high rates of growth, whereas the staple crops like wheat and rice has seen low levels of growth. Now we see here in this graph the international comparison of productivity of crops. So we can see that the productivity in India is much less than the world average. So even total productivity is for India, which is the orange bar, is less than the world average. Even for pulses, paddy, maize, soybean, groundnut. All right. So India has to increase its productivity. Now, another sector of agriculture is floriculture, where we are doing quite well. The floriculture is um, production of flowers, right? So India's floriculture industry is emerging as a high value export sector. There is high demand for flowers in other countries, and therefore India's floriculture industry has emerged as high value export sector, often referred to as the sunrise industry. Now, why is this floriculture promising? Because there is higher profitability per unit area than traditional field crops. Okay. So more profitably, which means more income for the farmers. There is an expanding global market demand for cut flowers, essential oils, plant-based perfumes, right? So there is more demand for flowers. There is also government subsidies and crop loans for farmers who are doing floriculture, right? Making it attractive for small farmers. So small farmers with a small piece of land can grow flowers and make good profit. Now, key states leading floriculture production is Tamil Nadu, Karnataka, Madhya Pradesh, West Bengal, Uttar Pradesh, and Maharashtra. Another subsector of agriculture is oil seeds. Now, oil seeds is the area in which we struggle a lot, right? It is a weakling in agriculture growth. The oil seeds has grown by only 1.9% CAGR, raising concerns about India's heavy dependence on edible oil imports. We are heavily dependent on edible oil imports. Okay. Now, why is this important? Because India is one of the largest consumer of edible oil. We have a huge demand for edible oil in our country, but we are not producing enough, right? The domestic production lags behind, making country reliant on imports from Indonesia and Malaysia. So we are importing edible oils from Indonesia and Malaysia. So it is necessary that we increase domestic oil production, which would improve self-sufficiency and reduce the foreign exchange outflows. Because whenever we are importing oil seeds or edible oils, we are giving out foreign exchange to pay for that import, right? So to reduce that and become self-sufficient, our oilseed production must grow. Now let's talk about the climate resilience and sustainability in agriculture, because agriculture sector is the most affected sector due to climate change. Okay, there is a growing climate crisis in the world, and particularly in India, which because India is a tropical country, so it is particularly vulnerable to climate change effects. Now, 55% of India's net sown area is still rain-fed. So we are still very much dependent on the monsoon, making it highly vulnerable to erratic monsoons. Now, more than two-thirds of agricultural land is drought-prone. So again, if there is too much rain, there is a problem. There is too less rain, then we become very drought-prone also. So there is less area under irrigation in India. Now, with climate change, we have started witnessing more and more effect of climate change. It has worsened the rainfall patterns. It has led to increased in extreme weather events like droughts and floods. In fact, between 1950 to 2015, extreme rainfall events has increased by 75% in central India, right? So we can see that there has been increased higher incidences of extreme weather events, and that has affected agriculture. Okay. Now, what can we do for it? We can improve our irrigation facility so that we are less dependent on rainfall. Okay. So in irrigation and water management, the government is running a scheme, per drop more crop scheme, which is helping in expansion of micro irrigation coverage. Because our traditional irrigation systems like the flood irrigation is highly water intensive, highly inefficient, leads to a lot of runoffs, lots of erosion of fertile soil, also very inefficient, also leads to deposition of minerals and salts on the fields, which makes them unfertile. So we should transition from flood irrigation to micro irrigation. And for that, the government program is per drop, more crop. So we can see there is this is the graph of increase in gross irrigated areas. So around 50% of India's gross irrigated area is under irrigation coverage. So this has to be further improved. Okay, it has been rising, but much more is required. If we talk about the area under micro irrigation, then more and more area is coming under micro irrigation, but obviously some challenges remain here also. Next, let's talk about agriculture finance and credit support. So agriculture finance is important, as we have already studied here. A major government initiative is the Kisan Credit Card. Okay. So now we have around 7.75 crore accounts of farmers who get Kisan credit cards, which they can use to procure loans. Okay. So the key benefits of Kisan credit card is low interest loans is given to farmers. Now with these loans, farmers are able to purchase seeds, fertilizers, equipments without depending on local money lender. Okay. So the informal sources of loans, which is the local money lender, who then will charge exorbitant amount of interest rates, right? So the farmer are saved from borrowing from local money lender, and they can directly borrow from formal sources like banks through Kisan credit card, and the interest rates will also be very low. It has also led to expansion in livestock and fisheries. Okay, so the Kisan credit card can also be used for allied activities like livestock and fisheries, and this has led to expansion in these sectors also. So you can see uh, more and more loans are given to farmers through formal banking structures, right? So the number of crop loans, terms loans, both has been increasing. There has been a declining dependence on non-institutional credit. So the local money lender who used to give loans at very high interest rates, that has the incidence of that has been decreasing. If we see in 1950, 90% of farm credit came from informal sources, from money lenders, traders. Now this has reduced to only 25% of farm credit is right now from non-institutional sources, and another 75% is from institutional sources like banks, right? Or banks or NBFCs. Now, why is this important? Because institutional credit protects the farmer from exploitative lending practices, right? So you would hear stories about how farmers would lose their land and also lose their houses to these money lenders who would exploit them and charge them exorbitant amount of interest rates. Okay. Sometimes even their family members have to work in the land of the money lenders just to repay the loan. Even many old movies you must have seen which were made in these issues. But अब इसका incidence काफी कम हो गया है. As you can see here, the declining share of non-institutional credit. So the non-institutional credit has been declining and the institutional credit has been increasing. Okay, so right now it is 75% and 25%. Next, let's talk about some market reforms that has been brought in the agriculture sector. Number one is ENAM, Electronic National Agriculture Market, which ensures better price realizations because it is an online platform. So anyone from around India can bid for the agriculture produce. So there is better price realization. There is online auction that happens. So better price realization by selling national buyers rather than local middlemen. So rather than selling in the local mandi to some middlemen who will dictate price of the produce, the farmers can directly sell online. Okay. It also promotes transparency in agriculture markets. Another initiative that has been initiated by the Maharashtra government is Maha FPC model. Okay. So here what is happening is the farmer producer organizations have come together and are involved in procurement and selling. Okay. So the farmer producer organization, the members of these farmer producer organizations are farmers themselves. So they ensure fair pricing for farmers, also reduce dependency on government procurement. Okay. So this is another good initiative. Let's talk about food security. Now, in food security, there are various initiatives of the government. Number one is Pradhan Mantri Garib Kalyan Ann Yojana, which was launched during the pandemic. It provides free food grains to economically vulnerable groups, right? And now it covers around 80 crore people and has been extended till 2029. So ensure food security, where food security is treated as a right? And not just a welfare measure. Another initiative is the One Nation, One Ration Card. So earlier what used to happen was people who had migrated to other states were not able to procure ration from fair price shops because their ration card was not valid in another state. But now there is One Nation, One Ration Card. So any person can go to any fair price shops all over India and procure food grains. So it allows migrants to access subsidized food anywhere in India, and it uses Aadhaar linked authentication. Okay. All right. So if we talk about the future of Indian agriculture, there are some challenges and there are some solutions that has been suggested by the economic survey. The challenges is there is overproduction of cereals and underproduction of pulses and oilseeds. Okay. So now the production of cereals has to be decreased and the production of pulses and oilseeds has to be increased. So that is one challenge. Another challenge is climate variability, which has led to rising input cost, groundwater depletion. Okay. There needs to be better price discovery mechanisms. Obviously, ENAM is there, but it is still not very prevalent. So there has to be more better price discovery mechanisms for the farmers so that the uh, profits by selling the agriculture produce gets to the farmer rather than being usurped by the middleman. Okay. So this will prevent farmer distress. Some policy solutions that is suggested by the economic survey is expanding the sustainable irrigation and micro irrigation. So micro irrigation has to be increased. So micro irrigation such as drip irrigation and sprinkler irrigation. There has to be promotion of climate resilient and high yield crops. Okay. Then strengthening of digital agriculture and market linkages. Digital agriculture means using digital tools for agriculture. So digital tools can be used for weather reports or for tracking the prices of agricultural goods in the market, for training of farmers. So digital agriculture can be strengthened. And then another policy solution that is suggested is diversification in farming. So the farmer should not just stick to farming, but also diversify and start rearing livestock, horticulture, fisheries to increase their income. The next chapter is climate and environment. Another major concern area for the Indian economy. Now, India, let's start by looking at India's development and climate commitments. Now, we are committed to become a developed country by 2047. We have a vision to become a Viksit Bharat by 2047. That is 100 years of our independence. Okay. But we do not want to become a developed country through just economic growth. We also want this growth to be inclusive and sustainable, right? So we are committed towards a sustainable development model. Now, India has a low per capita carbon emission. In fact, our carbon emission per capita is only one third of the global average. but still we are committed to a low carbon growth. We want our future growth to be more and more sustainable. Okay. Now, herein lies the challenge because India is the fastest growing economy and we cannot compromise with our economic growth. But at the same time, we also want to be sustainable, right? So there has to be a balancing act done between economic expansion and environmental responsibility. So, a key strategy here would involve identifying and adoption of low carbon development pathways. So, while we move on to a low carbon development pathway, we have to ensure that our energy security is not compromised. The job creation is increased. More and more jobs are being created, and at the same time, there is environmental sustainability. So, this will require a lot of challenges and a lot of initiatives by the government. Okay. If we look at some challenges in the renewable energy expansion, we see that although India has achieved increased renewable energy capacity, there are still issues here, right? What kind of issues? First is lack of viable storage technology. All these renewable energy, they are very intermittent, right? Renewable energy sources like solar is only available in the day. Wind again is not available all the time. So there is requirement for efficient storage solutions where energy can be stored, which India currently lacks. Another issue is the limited access to essential minerals, the critical rare earth minerals. Right? These critical minerals is needed for renewable energy infrastructure, for example, lithium, cobalt. Now these are very scarce, and also if we want to import it, is very expensive. So that is another issue, which is with renewable energy expansion. Okay. Next, the adaptation to climate change is going to be of key priority for India. So, going forward, India cannot just focus on mitigation efforts. Mitigation will happen, but the climate change is now very much a reality in the world. And India, being a tropical country, is more vulnerable to the effects of climate change. So, we must also focus on adaptation along with mitigation. Okay. So India's geographical and agroclimatic diversity makes it highly vulnerable to climate change. Now, recognizing this vulnerability, the government has started prioritizing climate adaptation. So we must become more resilient to climate change. Okay. If we look at the government expenditure in this area in financial year 2016, the adaptation expenditure was 3.7% of GDP. In financial year 22, it has increased to 5.6% of GDP. So which shows that we are emphasizing more and more on climate resilience. Okay. Another very important initiative in this path of low carbon growth is the LIFE initiative taken by Indian government, which stands for Lifestyle for Environment. Now, Lifestyle for Environment is an India-led global movement that encourages sustainable lifestyle, okay, and promotes circular economy principles, right? So what is circular economy? That we must not create waste products, but we must reduce waste, enhance resource conservation, encourage recycling. So recycling of things that we can recycle, like plastic bottles or paper or other things, that metal, steel, that we can recycle, right? The LIFE initiative aims to change consumer behavior towards mindful consumption and production. So, not mindless consumption and creation of lots of garbage and waste, but rather mindful consumption. Only consumption that is necessary, no more unnecessary wastage. Okay. If we look here, these life initiatives can lead to a lot of reduction in our carbon emissions, right? The lifestyle change by 13% of global population can reduce carbon emission by 20%. So there is going to be more simple lifestyle choices, changes in lifestyle choices can lead to lot of carbon emission, around 20%. In fact, a simple exercise like finishing the food on plate can avoid 90 kg of annual food waste per person. Okay. Carpool, right? Rather than each person driving his own car, carpool can reduce 780,000 rides per day, which will lead to saving 380 million liters of fuel in India, right? So that is again, small efforts can lead to larger effects, right? Recycling 1 ton of newspaper can avoid 25,000 liters of water wastage, right? So these little changes in our lifestyle can have major impacts. Now, if we look at climate finance, right, because all these mitigation and adaptation efforts will require a lot of financing. Now, here the developing countries, including India, receive insufficient financial support from developed nations, right? Although in the Paris Agreement, the developed nations have made several commitments to give finance to the developing countries, but that has not been enough. Okay. And also, the climate finance remains skewed towards mitigation rather than adaptation. Right. So the developed countries want the developing countries to reduce their carbon emission rather than their efforts toward adaptation to a newer world with where the climate change has become a reality. Okay. If we look at the outcomes of COP29, which was held in Baku in 2024, the developed countries fell short, 38% short of their nationally determined contributions, right? So they have not been contributing enough. If we look at the new collective quantified goals, NCQG, set at COP29, it lacks funding commitment necessary for effective climate adaptation. So even the commitments that the developed countries are making, it is not enough. Okay. The funding target of 300 billion annually by 2035 is only a fraction of the estimated 5.8 to 6.5.1 to 6.8 trillion dollars that is required by 2030. So I mean, not even 10% has been targeted. So there is a lot of efforts required in this area. Now, India, let's talk about India's climate vulnerability. Now, India ranks as seventh most vulnerable country to climate change, right? Because the location of India is in the tropics, and the tropical countries are going to be the major affected countries due to climate change. And the countries located in the temperate regions, they will witness lesser effects of climate change. Okay. So India's fourth most vulnerable country, we have already started witnessing extreme weather events like heat waves, floods, storms, but also slow onset impacts like things that are not visible, but are happening, right? Like sea level rise, biodiversity loss, water scarcity. Over long periods of time, these things tend to happen, right? Even though the greenhouse gas emission is a global issue, their impact is unevenly distributed. So they're going to impact some countries more than other countries. Now, developing countries, including India, will bear a disproportionate burden of climate change. Although historically we have contributed much less to the emissions. So historically, the developed countries have commit contributed towards increasing um, emissions, towards increasing climate change. But now the is going to be burden is going to come on the developing nations, including India. Okay, so India is very vulnerable. Now, what are some initiatives that are taken towards climate change? First is the National Adaptation Plan. Okay, so there is a Ministry of Environment, Forest and Climate Change has formulated the National Adaptation Plan so that they can identify what are the priorities adaptation priorities, then align strategies with sustainable development goals. We have SDG, UN Sustainable Development Goals. So our strategy should be aligned with these sustainable development goals, ensuring climate resilience across all regions and sectors. Now, in December of 2023, India submitted its initial adaptation communication to UNFCCC, and it outlined in this initial adaptation communication, it outlined what are the key adaptation policies that India will take up, what are the implementation support needs, and what are the specific sector-specific adaptation strategies. Okay. So let's see what are the sectors specific adaptation strategies, starting with agriculture, right? Now, agriculture sector is going to be the most affected due to climate change. Heat stress and water scarcity pose risk to food security, right? So what are the adaptation measures that we can take up here? First is R&D for climate resilient seeds. So we can develop more climate resilient seeds. Second is groundwater conservation efforts. So we can conserve more and more rainwater in the ground. So groundwater conservation we can do so that there is availability of irrigation. Soil health improvement programs can be taken up. And fourth, modifying the cropping patterns, right? So cropping patterns can be modified to suit the changing climatic conditions. So maybe the more of the water intensive crops or water guzzling crops like sugarcane or rice that can be reduced, and other water and, crops which require lesser water, they can be produced more. Okay. Second is with respect to urban resilience, right? In the urban areas, how we can adapt. So as urbanization increases, cities faces threats like heat stress, flooding, groundwater depletion. These are the things that can happen. So for this, the government has an initiative, National Mission on Sustainable Habitat, right, which was launched in 2010. It focuses on wastewater management, green buildings, sustainable mobility. Amrut is an initiative. AMRUT stands for Atal Mission for Rejuvenation and Urban Transformation. So public transports and public parks are developed under this scheme. Then there is need for stormwater management, mitigating urban flooding, and development of green spaces should be prioritized. Green spaces in urban areas like parks can help in enhancing sustainable environmental sustainability. Then how can we improve coastal resilience? The coastal areas of India, and India has a very long coastline, right? 7,600-kilometer coastline is highly exposed to sea level rise and extreme storms. So it is a very environmentally sensitive zone. So it is a highly environmentally sensitive zone. So it again requires adaptation. Here we have an initiative, the MISTI initiatives for mangrove afforestation. So mangrove afforestation is done in the coastlines. In fact, in this initiative, we have covered 540 square kilometers across 9 coastal states and 4 union territories. It has also created lots of employment, 22 million man days of employment. Now, under this initiative, we are also building sea walls and artificial reefs to prevent erosion. Okay. So these are some adaptation strategies for coastal resilience. If we talk about water resource management, then there is Jal Shakti Abhiyan, which is promoting water conservation, rainwater harvesting, water body rejuvenation, afforestation. Another initiative is Bhuneer Portal, which has been launched, which will monitor groundwater levels across India. Okay. Now, since India is transitioning from fossil fuel to renewable energy, we need to take learning from the developed countries. Now, historically, if we see the energy transitions in countries, it has always been driven by economic and security concerns, but not by climate goals. Okay, so if historically we see the coal replaced the wood. So wood was used, then it was replaced by coal, but it was done because in the 18th century there was the industrial revolution happening. There was industrial demand for it. Post World War II, the oil and gas replaced the coal, right? So again, it was an economic and security concern of the time. Then in 1970s, there was the oil embargo. So after that, the France transitioned to a nuclear power, right? So climate goal has never been a reason for countries transitioning from one source of energy to another source. It has always been an economic and security concern. Right? Even now, even today, we see the developed countries, they are highly dependent on fossil fuel. Okay. If we look at the G7 countries, they continue to rely on fossil fuel. If you see here in this graph, Canada has 65% reliance, US even higher, 80%, UK 74%, Germany 75%, France has more nuclear, but still 48% fossil fuel dependency. Italy at 80% and Japan at 83%. So highly dependent on fossil fuel. In fact, the European Union's Repower EU plan that is there for transitioning from fossil fuel still funds liquefied natural gas. Now, liquefied natural gas, although is a cleaner fossil fuel, but still is a fossil fuel, right? It also supports fossil gas-based power generation. So the G7 nation continue to be dependent on fossil fuel. In this scenario, even the developed countries are not able to transition. Then, uh, if we see India, India has performed much better, right? Now, India has energy security challenges. India's per capita energy consumption is 16.7 gigajoule, which is far below the required 45 to 75 gigajoule for developed status. So a developed country consumes this many gigajoules of energy, right? Whereas India, it is almost one third to one fourth of developed country. Now, what are the challenges here for renewable energy expansion? We require high infrastructure cost. For renewable energy expansion, there's requirement of high infrastructure cost. We lack storage solutions. There is limited access of critical minerals. So these are the things that we have discussed. So these are the challenges which is preventing India from transitioning into a more renewable energy from fossil fuel to renewable energy. If we look at coal in India's energy mix, unlike developed countries, India's coal-based power plants were mostly built post 2010. Okay, so the technology used is much cleaner for India's coal-based power plants. Now, to shut them down prematurely would waste investment and create energy shortages because India still remains highly dependent on fossil fuel, especially these coal-based power plants. So we cannot shut them down prematurely, but we can adopt a cleaner technology. For example, the advanced ultra supercritical AUSC technology, which will reduce emission by 11%. Okay. If we look at India's energy transition efforts, the renewable capacity right now stands at 213 gigawatt, which is 46.8% of India's total installed capacity. Okay. The solar power has expanded. Some of the initiatives of government here is PM Surya Ghar Muft Bijli Yojana, where the households are encouraged to install solar panels in their rooftops. Okay. Now, many solar parks is also being sanctioned. So the capacity, solar power capacity of India is increasing at a very high rate. There is also the green hydrogen mission, which is targeting 5 million metric tons of hydrogen production by 2030. Now, if we look here, this is the India's installed generation capacity. So the blue is fossil fuels and the green is renewable energy. So 46.8%, right? 46.8% capacity is renewable energy and rest is fossil fuel, coal and gas. Okay. Next, we talk about the life initiative of India, right? The lifestyle for environment um, initiative that India has taken aims to reduce individual and community emissions. Okay, so very few, some small steps you can, some small changes you can make to your lifestyle that will have larger impact if more and more people make these changes in their lifestyles, right? It can have a potential impact as we have already seen. If we do carpooling, we could save around 380 million liters of fuel annually. If we reduce food wastage, we can reduce 8% of global greenhouse gas emissions. Okay. Now, the government is also giving financial incentives like tax benefits if you buy a electric vehicle, right? Or if you buy a energy efficient appliance, you get tax benefits. So that may lead to behavioral changes in the individuals and communities. The next chapter is social sector. Now, if we look at the trends in social sector expenditure, now over years, the social sector spending has increased in recognition of the growing importance. The social sector expenditure, for example, the expenditure on education or health is very important for pursuing inclusive growth so that the fruits of the economic growth of India reaches to each and every person in the country. Okay. So if we look at the total social sector expenditure as a percentage of total expenditure, it has risen from 23.3% in financial year 21 to 26.2% in 25. So spending on social sector has been increasing. If we look at education, it has increased from 5.8 lakh crore in 21 to 9.2 lakh crore in 25, growing at a compounded annual growth rate of 12%. If we look at healthcare spending, again, it has increased from 3.2 lakh crore in 21 to 6.1 lakh crore in 25, growing at a CAGR of 18%. So the spending on social sector is increasing at a very high rate. Now, these figures highlight that the government is committed to strengthening the human capital, recognizing the long-term economic growth is sustained by investing in education and healthcare. तो अगर लंबे टाइम तक sustain करना है high growth rate, then the country must spend on its human capital, right? More spending on education and healthcare. So here you see the total expenditure and the expenditure on social services has also been increasing. The total expenditure obviously is rising and it now accounts for 26%, 26.2% of total expenditure. Here again is a graph of expenditure on education and health. So this on education, spending on education has also been increasing, spending on health has also been increasing at a very high rate. Now, if we look at the household consumption expenditure survey that is conducted, it looks at the household consumption expenditure done by households in India, right? And that is a key measure because how much the household spends indicates how well is the standard of living in that household. Okay. So HCS 2023-24 reveals that the urban rural consumption gap is declining, which means that the rural living standards are improving. So the key findings of this survey is it calculates the average monthly per capita expenditure. So in rural areas, it is around 4,122 rupees. In urban areas, the MPC monthly per capita average monthly per capita expenditure is around 6,996 rupees. Now, if we include the welfare benefits, it is slightly higher. Okay. Now, if we see that the urban rural MPC gap has reduced from 84%, which was there in 2011-12, to 70% in 2023-24, which means that the rural consumption is growing at a faster rate than urban consumption. So the gap is decreasing. If we also look at the Gini coefficient, now we know Gini coefficient is the measure of inequality. It is measured from the Lorentz curve and measures inequality in the country. So that has also reduced both for urban areas and rural areas. So the income disparity is also decreasing. Now, this has happened due to various government initiatives like public distribution system, Pradhan Mantri Garib Kalyan Ann Yojana, which gives free food grains. Then there is direct benefit transfers, which has helped in redistributing wealth and improving rural consumption patterns. All right. So here in the graph, we see that there is a declining urban-rural gap in consumption. So earlier the gap was 84%. Now it has reduced to around 70%. Okay. Now, if we look at specifically the education sector, and within education sector, the school education. So, the Indian school education system serves around 24.8 crore students. So, out of 140 crore population of India, 24.8 crore are school-going students, right? Across 14.72 lakh schools with 98 lakh teachers. Okay. Now, still there are challenges in our school system, particularly relating to enrollment, retention, and learning outcomes. If we see our school system, the government schools account for 69% of all schools, but they have enrollment of only 50% of students. Whereas private schools enroll 32.6% of students despite making up only 22.5% of total schools. So disproportionate uh, pressure is on private schools because parents think that private school children perform better, so they want to uh, put their children in the private schools. Okay. Now, our National Education Policy 2020 sets a target of 100% gross enrollment ratio by 2030. We want to achieve this. In fact, for the primary school, we have already achieved near universal enrollment. So it is around 93%. So slight decrease was there because a lot of students dropped out during the pandemic. But now it is near universal. In secondary school, the gross enrollment ratio is around 77%. So there is some gap here. And in the higher secondary school, the gross enrollment ratio is 56%. So this is because there are a lot of dropouts that happens while the student reaches the higher secondary classes, right? And majorly many of the female students drops out from the schools. Now, if we look at The school infrastructure has been improving. In fact, in 2023-24, almost 97% of schools have girls' toilet, 95%. So almost universal toilets in school, which is one of the major reasons why many of the girl students specifically drop out of school, right? There is hand wash facility, library, reading room, electricity. 75% of the schools have medical checkups at least once a year. 57% have computers, and 53% schools have internet. So even there is computers and internets for digital literacy in schools. Now, one of the very important factors with respect to education is foundational literacy and numeracy, right? The person should at least be able to read and write words and numbers. So, a strong education foundation is crucial for lifelong learning. Okay. The National Initiative for Proficiency in Reading and Understanding and Numeracy reading with understanding and numeracy, which is Nipun Bharat, which is the initiative of the government, aims for universal foundational literacy and numeracy by grade 3 by 2026-27. So Nipun Bharat is this initiative which aims that by 2026-27, every student who has studied till grade 3 would be able to read, understand, and also read with understanding and be proficient in numeracy, will understand numbers. Okay. Now, solution for FLN can be peer teaching. Okay. Peer tutoring programs are there in various states like Mission Ankur in Madhya Pradesh and Gujarat, Mission Daksh in Bihar, which has been launched, and studies have showed that peer learning improves engagement and comprehension. So, peer learning means students learn among themselves, they discuss and learn among themselves. So, this improves engagement of the student, it also improves their comprehension. So making it cost-effective, scalable approach to improve literacy, right? This can also be used among adults to improve FLN among adults also. Now, another important part of education is social and emotional learning. Okay. Now, social and emotional learning is crucial for mental well-being, emotional intelligence, and social adaptability, right? A person who understands emotions, who understands or is more social, has better mental well-being, is emotionally intelligent, and can adapt in any social situations, right? It enhances academic performance, reduces behavioral issues, and promotes resilience, right? So it with social and emotional learning, a person becomes a more well-rounded person. There are international cell models, social and emotional learning models. For example, C learning in Emory University, Ruler in Yale Center for Emotional Intelligence. Even in India, there are government initiatives like Tim Tim Tare, TTT initiatives, which focuses on life skills education, teaching empathy, critical thinking, and communication skills, right? And there are programs in certain states like Maharashtra, Mizoram, Uttarakhand, Rajasthan, which integrate social and emotional learning in school curriculums. And this is very important because it leads to a person with better mental well-being, more emotional intelligence, more social adaptability. So that person will be more suited for the society, right? And become a productive member of the society. Another important factor in education is digital and vocational education. Okay. Now, even though we have large digital penetration in the country and the mobile phone is available to almost all sections of society in the country, the digital divide still remains. right? Particularly in rural areas. If we look at the numbers, the internet searching skills are there with 63% rural men and 55% rural women. And in urban areas, the urban men have 74% of urban men have internet searching skills, and 69% of urban women have internet searching skills. So here the government programs like Diksha, Swam, PMG Disha, these are the programs which promote digital literacy, aim to bridge digital literacy gaps and equip students with the 21st century skills, right? In the 21st century, if you want to grow in your life, build a career, you need to have these digital skills. Okay. If we talk about higher education, the gross enrollment ratio in higher education has increased from 23% in 2014-15 to 28% in 21-22. There are more institutions of higher education now in India. The IITs has increased from 16 to 23, more IIMs, more medical colleges in India. Okay. Now there are certain new education policy 2020 from 2020 reforms with respect to higher education, right? So it aims to promote multidisciplinary institutions by 2040. So there will be higher education institutions with which will deal with multiple disciplines. There is also advocacy for greater autonomy and innovation in higher education governance, encouraging research, skill development, and international collaboration. Next, let's talk about healthcare. Now, in healthcare, the government has more emphasis on preventive healthcare, right? The government wants to prevent prevalence of diseases rather than allowing diseases and then treating them afterwards, because it is much cheaper and more effective to invest in preventive healthcare. Also, now the government has a big focus on mental health and use of AI driven healthcare solutions, right? Also, the lifestyle diseases, right? Diseases like non-communicable diseases like diabetes or cholesterol or fatty liver, these sort of diseases are a growing concern, which requires early intervention and behavioral changes, right? Dietary changes or changes in the lifestyle. So if we look at our health policy, these are the key pillars of our health policy in the preventive health care. We have various initiatives under the National Health Mission. For early detection of ailments, there is National Program for Prevention and Control of Non-Communicable Diseases. For free and low cost treatment and medicines, there is Jan Aushadhi Kendra, PM Jan Arogya Yojana. For for availability of doctors in rural areas, there are sub centers, primary health centers, community health centers in rural areas. So doctors are available there. For expansion of technology in health, there is Ayushman Bharat Digital Mission, UWIN portal, eSanjeevani, right? So these are the pillars of our health policy. If we look at the total health expenditure per capita and a share of GDP, so that has also been increasing, right? So total health expenditure on each individual has been increasing. Also, as a percentage of GDP, it's been increasing. Okay, right now at 3.8% of GDP. Now, out of the total health expenditure, there is it can be divided into out-of-pocket expenditure and government health expenditure. Now, earlier, the out-of-pocket expenditure used to be higher and the government health expenditure used to be lower. But now the situation has changed. Now the government health expenditure is higher and the out-of-pocket health expenditure is lower, right? So again, that is a good sign. Another important factor with respect to healthcare is mental health and workplace well-being, right? Now, mental health is as important as your physical health. Mental health is a growing concern because it also impacts the economy. It affects the productivity of the person. It affects societal harmony, right? In fact, workplace mental health initiatives are getting increasingly recognized as essential for employee well-being and efficiency of the company as a whole. Here, the government's focus are on reducing the stigma involved with mental health issues, encouraging businesses and institutions to integrate mental health support in the workplace policies, right? So that the workers do not experience too much stress and too much anxiety in overall. They have good work environment, and this will also leads to increase in efficiency in the workplace. Now, the government is also focusing on increasing accessibility to mental health services through digital platforms and AI-based support systems, right? So, uh, even the accessibility of mental health services, so accessibility to psychiatrists, therapists, those things are also increasing. Okay. Now, here, if we see the mental well-being, different lifestyle choices can have impact on your mental health, right? For example, if you consume too much ultra processed food, uh, you have less mental health well-being. If you rarely or never consume ultra processed food and consumption, you are better. If you are close to your family, you have better um, mental well-being. If you spend your free time playing, listening to music, meeting friends, then it is good for your mental health. Whereas if you spend your free time on social media, it is not good for your mental health. Similarly, if you do more frequent exercise, good for your mental health. If you don't do exercise, it is bad for your mental health. So, a lot of lifestyle changes can impact your mental well-being. Next, in healthcare, let's talk about medical education. Now, we have a doctor-patient ratio of 1 is to 1,263, which is lower than the WHO recommendation of 1 is to 1,000, right? So although our doctor-patient ratio is improving, there is need for further improvement. Now, one of the reasons why we have low doctor-patient ratio is because of high cost of medical education in India. On an average, 60 lakh to 1 crore is spent per seat in private colleges in India. Now, this type of money is not available with everyone in India, and therefore, a lot of students seek foreign medical education, right? They find it cheaper to go to other countries to get medical education. So here the government is working on reforming the regulatory processes so that the medical licensing examinations are conducted and foreign medical graduates will be able to practice in India. Next chapter is employment. Now let's start with the significance of employment in economic growth. Now it is said that employment serves as a critical bridge between economic growth and social well-being. So, economic growth without employment will not lead to social well-being, right? The quantity and quality of jobs available in the economy determine how effectively the prosperity is distributed among the population. Okay, so if there's more jobs available, there is more good jobs available in the economy, which means that the fruits of economic growth is being distributed among the population. Now, a country experiencing high economic growth without sufficient employment risks widening income inequality, right? Which means that the major part of the population does not have any income, and some few people are usurping major benefits of the economic growth, which will lead to high income inequality. And in a society with high income inequality, there will be social and economic instability. Okay, there will be rise in crimes. So that is not good. Now, let's talk about India's demographic advantage. Now we know that India has a demographic dividend, right? This is a unique demographic opportunity, which means it only comes once in the life cycle of any country when it transitions from a low, high birth rate and high death rate to low birth rate and low death rate country. So India currently has around 26% of the population in the 10 to 12, 20, 24 years bracket, right? So almost one fourth our population in this bracket, which means a large working age population can drive economic growth if provided adequate employment opportunities are available, right? So the working age population is going to be large. When we compare this to developed nations, they have a aging population, right? So aging population means lesser proportion of population in the working age and higher proportion in the old age, right? Where India's median age is around 28 years, right? So India's population is still very young compared to other countries like Japan, USA, which has a shrinking workforce. Their population is getting older. Okay. Now, this declining dependency ratio, what is dependency ratio? Is the ratio of working age population to the dependent population. Okay. So if there is larger proportion of the population in the working age, which means that more working age people will be carrying the dependent population, which can become an enabler of growth. So the dependency ratio measures proportion of dependents, children and elderly relative to the working age population. Now, due to declining fertility rate, the child dependency ratio has decreased, right? So there are lesser children now because the fertility rate has declined, which means fewer children are dependent on working adults. Okay, so the working adults have to support fewer number of childrens. Now, although the elderly dependency ratio is gradually increasing because the life expectancy is increasing, though, so the number of elders are increasing, but it still remains relatively low compared to developed nations. So in the developed nations, obviously the old age population is much higher. In India, is still low. Now, this trend has led to overall decline in the total dependency ratio, right? So the number of dependents to the number of working age population in 2011, it was 64.6%. In 2021, it is 55.7%. So dependency ratio has decreased. And there are projections that it will reach 54.3% by 2026. Okay. So which means lesser number of dependent population and higher number of working age population. Now, this is a very unique window of opportunity. And to take benefit of it, we need more productive jobs, right? So there is an urgency of job creation in the country. So to capitalize on demographic dividends, India needs 78.5 lakh non-farm jobs annually until 2030, right? So this is the number of non-farm jobs we require. Why does it say non-farm job? Because India is an economy under transition. We are transitioning from agriculture to industry to service, right? Now, agriculture already supports around 46% of the workforce. Now, majority of this work, much of this workforce is going to move out. into industry and services. So we do not require more agriculture jobs. We require non-farm jobs. Okay. Now, the primary challenge is not just creating jobs. We don't just have to create jobs, but to also ensure high quality, sustainable employment. High quality jobs we require, right? Which improves productivity and economic inclusion. Now, this will require structural transformation, shifting employment from agriculture to manufacturing and services. And also the jobs in manufacturing and services we have seen offer higher income and better job security. Okay. Now, if we look at the current status of employment in India, then as per the periodic labor force survey of 2023-24, India's labor market has improved significantly since pandemic. So after pandemic, obviously during the pandemics, there was a lot of unemployment because the economic activity had almost come to a standstill. But after that, it has improved significantly. The unemployment rate for individuals aged 15 and above has fallen from 6% in 2017-18 to 3.2%, right? So this is the unemployment has decreased, which means more and more people are getting jobs. The labor force participation rate and worker population ratio has increased. So more people are joining the labor force, indicating more people actively engaged in workforce. Now, this is significant because just after pandemic, there was high unemployment, right? And there was concern that will people find employment? Will there be economic recovery, right? But this decline in unemployment rate assures that Indian economy has been performing well and people are finding employment. So in this graph, you can see the improvement in annual labor market indicators. So labor force participation rate has increased, worker population ratio has increased, and the unemployment rate has reduced to 3.2%. Now, if we look at the employment trends of urban versus rural, in urban areas, the employment rate has declined from 6.6% to 6.4%. So it was 6.6% in 24 to 6.4% in 25. Now, this improvement suggests better job availability in cities, which is driven by service-based industries, digital economy jobs, right? So many jobs like your gig jobs are being created, which is platform-based jobs like your Zomato, Uber, these kind of jobs are being created a lot. Construction activities is also leading to lot many job creation. In rural areas, employment trends reflect a strong recovery as well. So even in the rural areas, there is greater recovery of employment driven by agriculture. So agriculture this year has performed very well. There is also self-employment and informal sector work. Now, if we look at the category-wise employment status, we see that the self-employed, people who are self-employed has increased. The regular wage salaries has almost remained at this level and the casual labor has decreased. There is a clear pattern of decrease in number of casual labor. Okay, which means the casual labor is transitioning to becoming self-employed. There is rising self-employment, which has increased from 52.2% in 2017 to 58% in 2023-24. Now, what does this suggest? Number one, there is greater entrepreneurial activity. Many people are becoming entrepreneurs, they're becoming self-employed. driven by initiatives like Startup India, Mudra Yojana, Stand Up India. So all these initiatives are there, which are encouraging entrepreneurs. It also suggests that there is rise in informal work. Okay. So rather than um, being employed in casual labor, there is rise in informal work where people, especially women, engage in family enterprises or small businesses rather than regular salaried jobs, right? And this particularly happened during the pandemic, where many women transitioned from regular salary jobs to small businesses, home-based businesses, or joining the family enterprise. It is also This also suggests that there is an increase in own account workers, where individuals operate independently, often in gig economy roles, right? Gig economy roles like becoming delivery partners with companies like Zomato, or becoming Uber drivers, driving their own car as taxis. Okay. Now, another trend is decline in casual labor. So the casual labor declined from 24.9% to 19.8%. So it indicates that there is a shift towards structured employment, right? So people are seeking greater job security, so they are less and less inclined to engage in casual labor. Also, there is less reliance on daily wage work, which is often associated with lower earnings and job instability. Okay, so there is decline in casual labor. If we talk about the changing role of women in employment, then we see that more women are participating in self-employment and household enterprises, especially in rural areas. Okay. And the regular salaried jobs for women has declined, particularly in rural areas. So it was 10.5% in 2017-18. It has declined to 7.8% in 23-24. Similarly, in urban areas, also the salaried employment for women has declined from 52% to 49%. But the entrepreneurial and flexible work arrangement has increased, right? And this has been due to the pandemic, uh, which accelerated this shift, right? So during the pandemic, many women left their regular jobs to balance household and childcare responsibility, and then they started doing either work from home or work where there is more flexible work arrangement, or become entrepreneurs and started their own home-based businesses. Okay. Now, if we talk about the sectoral distribution of the workforce, we see that in agriculture, it continues to be the major sector providing employment. It is dominating employment. In fact, it has increased from 44.1% in 2017-18 to 46.1% in 2023-24. So rather than declining, and this is a concerning issue, that rather than declining employment in agriculture, now it accounts for greater proportion of our workforce, 46.1%. Okay. Whereas manufacturing and services sectors has seen decline. Manufacturing employment fell from 12.1% to 11.4%. Services sector has declined from 31.1% to 29.7%. Okay. In agriculture, we see a gender divide. Okay. More and more women are now joining agriculture. So the women in agriculture has increased from 57 to 64%, suggesting a higher dependency on farm-based livelihood. So while the men are migrating to urban areas, more women are now taking care of agriculture in rural areas. So men in agriculture has actually declined from 40%, 40.2% to 36.3% as more move to construction, trade, and transport in urban areas. Okay, so this has been the broad trend. If we talk about the female labor force participation rate, we see an increase FLFPR from 23.3% in 2017-18 to now 41.7% in 2023-24. So more and more women are joining the labor force. Now, what are the reasons? Various government programs are there like Deen Dayal Antyodaya Yojana and RLM, which provides skill training, financial support. There is now better recognition of unpaid work in surveys. Okay. More women are entering self-employment and informal work. So all these has led to greater female labor force participation rate. Now, if we look at the average earning across job categories, how much an average person earn in these category? So the self-employed earns around 13,279 per month. Okay. Whereas a regular salaried worker earns 20,700 per month. Okay. Whereas a casual labor earns 418 per day. Now, a casual labor, he does not have job security, so he may not be employed for all the 30 days of the month, right? But even if he is employed for all the 30 days of the month, and if we multiply it by 30, it will come around 12,500, which is lower than self-employed. Okay, so the larger trend that casual labor is decreasing and self-employment is increasing is actually not bad, right? It is a welcome trend. Now, if we talk about the growth in earnings, we see that the salaried workers' wage grew by compounded annual growth rate of 5%, and casual wages grew by 9%, which indicates improvement in daily wage job pay. So, because the pay itself is so low that it is increasing at a higher rate. All right, next let's discuss the corporate profitability versus wage growth. Are the companies transferring their profits to their employees? Okay. So if we see in financial year 24, the corporate profit rose by 22%, but the employment grew by only 1.5%, right? Which indicates that the companies are now, rather than providing more jobs, are shifting towards cost cutting and automation, right? So this is again a challenge for the economy. If wages stagnation continues, consumer demand may decline, right? If the jobs are not available, then people won't have income, right? And if there is no income, the demand will decline, which will affect the long-term economic stability. All right. So what is the way forward? What are the challenges and way forward? There is a need for skill development with industry needs. Whatever the industry needs, the skill should be developed according to the industry needs, right? So it will ensure more and more people get employed. There has to be more social security for informal workers, right? Through schemes like e-Shram or EPFO, social security must be provided so that even if they are not able to join the workforce for few days, if they are sick, maybe they will have enough social security that they can sustain and not go down below poverty line. Then there is need for encouraging more women's workforce participation. For this, several initiatives has to be taken by the government for providing child care support, gender inclusive policies, so that women feel more included, welcome in the workplaces. Then there has to be more job creation in emerging sectors like digital economy, renewable energy. These are the emerging sectors, and more jobs can be created here. The last chapter and a very interesting chapter is labor in the AI era. So artificial intelligence is nowadays the buzzword, and it is having a growing influence in the labor market. It is advancing rapidly Now, while it brings unprecedented opportunities, a lot of opportunities it brings in increasing the productivity of the workers, and in many areas it can do many jobs. It also possesses significant challenges, right, for the workers, businesses, policymakers. Now, in many areas like healthcare, education, financial services, there is increasing automation of decision making. So many decisions that were earlier done by workers is now done by AI, which has raised concern about job displacement. With that, will artificial intelligence replace jobs, and will many people start losing their jobs to AI? Right? In fact, the founder of OpenAI, the company which has created ChatGPT, has predicted that an AI powered office worker will be ready by 2025, right? Which is the current year. Now, if an AI powered office worker will be ready, then the company will no longer require the services of a person. They can just buy the AI powered office worker, and that worker can do the job. So this will lead to job losses, right? And therefore, there is a need for understanding the AI's impact in the labor market. If we see historically, every technological revolution has required strong institutions to manage disruption. So every new technology creates disruption, right? And it requires strong institutions to manage these disruptions, to ensure that the benefits are not cornered by a few people. There is widespread benefits. Everyone get benefit of the technological revolution, right? Now, in India, the labor market is highly diverse, right? There is wide range of diversity in the labor market, to agricultural labor to labor in the industry to in the services sector. There is a lot of diversity and it is still evolving, right? The structural transition is still taking place from agriculture to industry to services. And therefore, the role of institutions become even more critical, right? And it is widely believed that AI adoption will benefit only if investment in education and workforce training is prioritized. Until unless we have a workforce which can utilize AI, right? Only then it will be beneficial. Otherwise, there will be widespread disruption. Now, regarding concerns for job losses, the AI's growing role in automating routine tasks is reshaping the nature of employment. So the routine tasks are going to be replaced by AI, right? Because AI, intelligence, is getting better and better in doing at least the routine jobs. Okay. Now this creates a problem because many of the entry level jobs are routine jobs, right? But for a person, these entry level jobs act as a stepping stone into professional careers, right? Now, these entry level jobs, if they are replaced by artificial intelligence, then people will not have an entry level job only, right? So, how are they going to progress in their career and then step into the higher level jobs? So, that is an issue. Now, although executives and CEO are optimistic about AI's potential to reduce cost, many of the owners of companies or executive CEOs of big companies, they are optimistic that AI will help them reduce cost. But it is also concerning that this may come at the expense of jobs. Even the jobs may be lost. And this is particularly true for the service sector, because the service sector jobs, particularly the repetitive entry level jobs in the services sector, will be the first one that will be replaced by artificial intelligence. If we see already, many of the companies are now have AI chatbots. So earlier there used to be a person behind these grievance redressal chat boxes chatbot who used to communicate with the customers. Now that has been already been replaced by the AI chatbots, right? There is also concern regarding unequal distribution of AI benefits. So it is uh, there is concern that the AI research and development, which is right now concentrated in few large corporations, will gain monopoly, right? So these few large corporations, they will have monopoly over artificial intelligence, which will create a scenario of winner takes all, right? These companies, corporations have early mover advantage, and they will uh, corner all the benefits of artificial intelligence, and the rest of the population will be left out, right? So a winner takes all scenario may emerge where AI's benefit primarily flow to technically advanced nations. So technically advanced nations, which are the first movers in AI, like USA and China, they may corner all the benefits, leaving the developing economies behind. Now, India is a labor-rich country, right? Now, we talk about demographic dividend, but if won't be availability of jobs, then this labor-rich country can become a demographic disaster also. So India has to be cautious, as an AI-driven economy could lead to greater income inequality, right? If not managed properly. And therefore, there has to be discussions and deliberations in India regarding how AI should be managed. Okay. There is also shifting public perceptions with respect to artificial intelligence. Now, earlier also there was prevalence of artificial intelligence integrated into daily lives, right? There was already autocomplete. If you're chatting on maybe WhatsApp or some other app, there was autocomplete, which was artificial intelligence only, but not as pervasive, right? There was autocomplete, virtual assistant, recommendation systems, which would recommend you videos on YouTube or songs on Spotify, those sort of things, or movies on Netflix. These were already there, but most people were unaware of its presence. But in the last 4 years, this has changed dramatically, right? Generative AI models like ChatGPT, Midjourney have made AI capabilities highly visible, right? So, like Midjourney can create images, even can create videos, which are highly realistic. Now, all this has sparked a debate that whether AI should be aligned with the broader societal goals rather than purely focusing on efficiency and profit. Right? If left to a few players, they will try to extract as much profit from artificial intelligence. But should AI be also aligned with the broader societal goals of inclusive growth and development? Right? So these are the debates that are happening. Now, if we take historical lessons from previous technological revolutions, right? So past technological shifts that has happened in the history of human, such as the Industrial Revolution. Even the Industrial Revolution caused mass job displacement, right, leading to economic hardship for displaced workers. Many of the people lost their jobs due to Industrial Revolution. In fact, many of the industries during industrial revolutions experienced long-lasting unemployment because now there was a mismatch between old and the new skill requirements, right? People who had old skills were not able to adapt with the requirements of new skills and experienced long-lasting unemployment. So we do not want a repetition of the same situation where large number of people experience unemployment and are not and do not have the skills in this new era of artificial intelligence. Now here India has unique challenges because India's labor force is very large. India has a large labor force. Now, if at this moment of time there is more automation in industries, be it in service sector or industrial sector, it could worsen unemployment if workforce reskilling is not prioritized. If our workforce are not properly reskilled into present demands in this AI era, it may lead to a lot of unemployment. Okay. Now we already know that by 2030, India must create 7.85 million jobs annually in the non-farm sector, right? Now, this is a challenge which can become even worse through artificial intelligence, by artificial intelligence, or it can help solve depending on how it is implemented. So it can either AI can benefit and create more jobs, or it can take up many jobs, right? Depending on how artificial intelligence is implemented. Okay. Even now, many IT sector jobs which involve low value tasks make them highly vulnerable to AI driven automations. As I already talked about, like many of the grievance redressal or chatbots has been replaced by AI driven chatbots, right? Now, if automation reduces employment, बहुत सारे लोगों का अगर जॉब चला जाएगा, so they will not have income, and if they don't have income, it may lead to decline in consumption, and decline in consumption will further lead to macroeconomic instability. Okay. In this scenario where AI possesses many risks but also offers many opportunities, there has to be institutions which will manage artificial intelligence, right? So there is role of institutions in managing AI's impact. The first kind of institutions are enabling institutions. These enabling institutions' purpose will be to help workers adapt to AI-driven changes by upgrading their skills. So this will upgrade the skills of the workers so they will become more productive through the help of artificial intelligence, right? So what will be their functionality? Providing retraining programs for workers in at-risk industries, right? So workers can be retrained so they can be inducted in other sectors. Develop education policies that integrates AI literacy in school and college curricula. So in school and college itself, people can be taught AI literacy. Students can be taught AI literacy. Encourage businesses to adopt AI in a way that augments human capabilities rather than replacing jobs. So rather than replacing jobs, replacing the workers can become more productive through help of artificial intelligence. The second kind of institutions that is required is ensuring institutions, right? That the institutions that will provide financial and social safety net to the workers who are displaced by AI. So a worker whose job has been taken by artificial intelligence, these ensuring institutions at least will ensure that they have some social safety nets, right? So the functionality of these institutions will be introducing income support programs for workers in transitioning industries. So they will be provided some sort of income support, maybe something like unemployment, wages, unemployment uh, income that may be given to them, right? These institutions will also ensure labor right protection as automation increases, right? Because as automation increases, there can be increasing incidences of labor right violations. Okay, so these ensuring institutions will ensure labor right protection. It will prevent growing income inequality by taxing AI-driven productivity gains and redistributing wealth through welfare programs, right? So some redistribution of wealth will take place. So at least it ensures that there is not a condition of where winner takes all, right? So some redistribution this ensuring institutions will do. Another sort of another kind of institution that will be required is stewarding institutions. What is stewarding institutions? Their purpose will be to ensure ethical AI development, right? Because AI development, it is a science. It does not by itself has any ethics, right? So ensuring ethical AI development will be the part of these stewarding institutions, right? They will make policies, do interventions to guide AI's impact on society. So their functionality will include monitoring the AI applications to prevent misuse and bias, because there is also a concern regarding bias in artificial intelligence, because these artificial intelligence, they are trained on existing data, right? And when then there is bias already there in the existing data, then these artificial intelligence also develop these biases. So these rewarding institutions will ensure that there is no misuse or bias in the artificial intelligence. They will also create regulations that balance innovation with public welfare. They will ensure transparency in AI decision making, especially in critical areas, right? Critical areas like healthcare, finance, where accurate decision making is very important. So there, these stewarding institutions can ensure there is transparency in AI decision making. All right. Now, next, the economic survey talks about the barriers to large scale AI adoption. Can we adopt artificial intelligence at this stage in large scale? Says that AI is still at a very experimental stage, right? AI today remains highly experimental, making real world applications unreliable. So there are not many real world applications, uh, reliable real world applications of artificial intelligence now, but that may change in the future, right? For instance, the self-driving cars struggle with real-world unpredictability, or AI chatbots still make factual errors, right? Sometimes there are hallucinations in the AI, right? It gives out incorrect, inaccurate information. So it is still at a very experimental stage, and it is still very unreliable. So maybe uh, for now, it does not have many real world applications, but that may change in the future. Okay. There are also reliability issues, right? AI models often hallucinate incorrect information. So it gives out incorrect information, and which makes them unreliable for industries where precision is crucial, right? For example, healthcare, finance, legal areas where precision is very crucial. And in these areas, if there is artificial intelligence applied and they, you know, spit out incorrect information, then that is an issue, right? It could have severe consequences, right? In fact, there are AI generated hiring models. So AI was used to hire people for the company, and it started showing bias, right? Favoring certain demographics over others. So because of these reasons, the AI adoption right now is um, an issue. Also, there are infrastructure deficit. Now, for large scale AI adoption, you need powerful computing infrastructure, you need high quality data processing centers, you need stable chip supply chains. Now, especially the developing nations, including India, lack the required digital infrastructure, right? which makes AI growth slow and uneven, right? So the developed countries may adopt AI at a much faster rate, and the developing countries may struggle to adopt AI. There are also the issue of resource inefficiencies. Now, training an AI model requires training it with a lot of data, right? And it is also extremely expensive. For example, the OpenAI's GPT-4 model cost 78 million to train. The Google's Gemini Ultra model cost 191 million to train. All right. So these are also very expensive. But on the other hand, the recent news was China's DeepSeek, right? Which was trained at a much cheaper rate, around $5 million. So maybe in future, this cost may decrease. AI also requires massive energy. It also requires massive water consumption, which raises concern regarding the environmental sustainability of artificial intelligence. Also, AI could create shortages in rare earth minerals, right? Minerals like gold, silver, rare earth metals, which are needed for computing hardware. So in future, these shortages can also happen. So, you know, right, we are uncertain about what the impact of AI is going to be in the future. Is it going to be a productivity enhancer or is it going to be a job destroyer? Okay. Many believe that AI can assist workers rather than replacing them. So rather than replacing the workers, it can assist worker and improve the productivity and efficiency of the worker. Right? AI customer support tools improve efficiency by 14% on average. Right? So a person who has AI at its disposal, he can be more efficient in dealing with customer support. AI scientific research assistant help generate new hypotheses faster, right? So it increases the pace of research and development. Now, there are studies that suggest that AI will increase jobs in high demand industries. So some sectors, the AI is in fact going to increase the number of jobs. Okay. For example, the financial services, healthcare, business sectors show high demand elasticity, meaning AI-driven productivity improvement will likely create more jobs rather than displace workers. Right? So these are the sectors where more jobs is going to be created. Now, if we talk about India's services sector, then the financial sector is still growing and can benefit from AI without massive job losses. So more jobs can be created in the financial sector. If we talk about the healthcare sector, AI can be used for disease detection, diagnosis, treatment, enhancing doctors' productivity. So rather than taking the job of the doctor will become more productive with AI at his disposal, right? Rather than replacing them. In retail and trade, AI can be leveraged for customer insights, demand forecasting, logistics, right? Many of the companies are doing it right now. For example, your Amazon or other retail, they use AI to predict or get insights into customer demand, forecasting, and logistics, etc. So these businesses will become more efficient without cutting jobs. So in conclusion, do we believe that AI is a crisis or a catalyst? So in conclusion, we can say that the long-term impacts are still unclear. The AI is still at a very early stage. It is still developing, right? The widespread effects on the labor market are yet to fully be realized. but at least the debates should start happening right now. The prediction of mass unemployment may be exaggerated. Maybe even in the past, in the history of human, many new technologies has come and they have also replaced jobs, but also created many new jobs, right? When internet came, it replaced many jobs, but also created many more jobs. When the computer came or many other technologies came, they have changed the labor market. So the mass prediction of mass employment may be exaggerated, but we cannot ignore also, right? We cannot ignore the risk. We have to be mindful of the risk associated with artificial intelligence. So what is required is proactive policy making, right? Rather than being reactive, the government should be proactive. Governments, businesses, education institute must work together to ensure that artificial intelligence augment jobs rather than replace jobs. Workers are retrained. So workers who lose their jobs due to artificial intelligence, they are retrained into new roles. And AI is regulated responsibly to prevent its misuse. Okay. So final thoughts with respect to artificial intelligence. Now, artificial intelligence is a technological innovation, right? It was not developed to solve a pre-existing issue. There is no issue that AI is going to is looking to solve, but it has rather emerged as a technological innovation. Okay, so the key question that remains is that is AI making society more productive or is it creating unnecessary disruptions? Right, so that is the key issue. And in response, the India must actively shape its AI policies. India should be active, proactive rather than reactive, right? So it should actively shape its AI policies rather than reacting to changes after they occur. All right, this brings us to the end of the economic survey. Thank you.